in a
of illegal immigrants and drowning in disastrous regulations. I hear from my constituents all the time that inflation and, an unsustainable cost of living continue to impact their families. For far too many, the American dream seems further and further out of reach than ever before. And frankly, the past 3 years of this administration's failed policies have landed us right in that spot. In fact, last month, Treasury Secretary Yellen sat before this committee and attempted to spin a narrative of how strong the economy is, how well off consumers are, and how much people have in the bank thanks to Bidenomics. But in the midst of this, she also admitted that many prices are not going down. In fact, she said, and I quote, "We don't have to get these prices down." Tell that to the mechanic working in South Carolina. Tell that to the teacher trying to put gas in the tank. It is simply unacceptable. Because the truth is that Americans are now spending more of their income on food than they have in 30 years. The truth is that housing affordability remains at its lowest level in 40 years. But inflation isn't the only concern I'd like to raise. I'd also like to address the economic impacts of illegal immigration. During your recent interview on 60 Minutes, you stated that over time, the U.S. economy has benefited from immigration. Let's be clear, America is a nation of immigrants, no doubt. But when we talk about illegal immigration today, we must also face the dire reality that our towns and our cities are suffering from the adverse impacts of illegal immigration facilitated by the Biden administration's open, unsecure, and unsafe southern border. Because of President Biden's policies, we've seen over 7 million illegal immigrants cross our borders in just 3 years. By the time this election happens this year in November, the numbers suggest it could be as high as 10 million illegal immigrants coming into our country. So we cannot have an honest conversation about the benefits of legal immigration in our labor force without also addressing the elephant in the room. Our country is strained. Our economy is strained under the weight of illegal immigration. In fact, recent reporting has highlighted that cities and states across our country are struggling to keep pace, and some have been forced to cut public services to Americans in order to fund the cost of feeding and housing illegal immigrants. One clear example we saw in New York City were the poorest kids in the city, minority kids in the city, were stuck at home because the city was using the schools to house illegal immigrants. Another example, the city of Denver recently announced that some of its employees may have their hours cut in order to reallocate funds toward the city's migrant crisis. How in the world is that fair to Americans? It's not. We must get the illegal immigration crisis under control, because if we don't, our local economies will continue to be crushed and opportunities will continue to be stripped from our citizens and their families. Finally, as if inflation and the negative impacts of illegal immigration were not enough, the tsunami of regulatory red tape coming from our financial regulators further threaten economic opportunity across the board. For months, we've heard bipartisan criticism of the Fed's Basel III endgame proposal, which will restrict lending and access to credit for those who need it the most. I was certainly pleasantly surprised to hear your comments about Basel III and your thoughts on its future.
I don't have any bagels.
97% of the comments.
If I had a bagel right now, I would eat it.
That's good news.
That sounds
Good
delicious.
news for the American consumer. Good news for entrepreneurs who would like to start a business but do not have access to capital. Perhaps even good news for millennials who would love to become a first-time home buyer. The opposition to Basel III comes from diverse array of interests, from community leaders, farmers, to housing groups. We've even heard opposition in this very room, on this very committee, from Democratic senators. I look forward to hearing your testimony and looking forward to
Bagels are what the Spaniards call dope as fuck.
Thanks, Sir Scott. We'll hear today,
Whoa.
as we do every 6 months at least, from Chair of the Federal Reserve, Jerome Powell, on monetary policy.
It's Mr. Brown, spokesman for Philip Morris.
Thank you for your service to our country.
Thank you, Chairman Brown, Ranking Member Scott, and other members of the committee. I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report today. Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward these
The
objectives
gentleman
over
from
the past
Philip
year.
Morris.
While inflation remains above the FOMC's objective of 2%, it has eased substantially, and the slowing in inflation has occurred without a significant increase in unemployment. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals have been moving into better balance. Even so, the committee remains highly attentive to inflation risks
Is that better?
and is acutely aware that high inflation imposes significant hardship, especially on those
Yeah,
least
Beyond was
able to
still
meet
on
the
reg
higher
shows
costs
of
of
last night.
essentials like food, housing, and transportation. The FOMC is strongly committed to returning inflation to its 2% objective. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. I'll review the current economic situation before turning to monetary policy. Economic activity expanded at a strong pace over the past year. For 2023 as a whole, gross domestic product increased 3.1%, bolstered by solid consumer demand and improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains relatively tight, but supply and demand conditions have continued to come into better balance. Since the middle of last year, payroll job gains have averaged 239,000 jobs per month, and the unemployment rate has remained near historical lows at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers, particularly among individuals
I know
aged
NVDS
25
is
to
on reg
54,
show.
and a continued strong pace of immigration. Job vacancies have declined, and nominal wage growth has been easing. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. The strong labor market over the past 2 years has also helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past year, but remains above the FOMC's longer-run goal of 2%. Total personal consumption expenditures prices, or PCE prices, rose 2.4% over the 12 months ending in January. Excluding the volatile food and energy categories, core PCE prices rose 2.8%, a notable slowing from 2022 that was widespread across both goods and services prices. Longer-term inflation expectations appear to have remained well anchored, as reflected by a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. After significantly tightening the stance of monetary policy since early 2022, the FOMC has maintained the target range for the federal funds rate at 5.25% to 5.5% since its meeting last July. We have also continued to shrink our balance sheet at a brisk pace and in a predictable manner. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. We believe that our policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economic outlook is uncertain, and ongoing progress toward our 2% inflation objective is not assured. Reducing policy restraint too soon or too much could result in a reversal of progress that we've seen in inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the policy rate, we will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target rate until it has gained greater confidence that inflation is moving sustainably toward 2%. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Thank you, Mr. Chairman. You've acknowledged the Fed likely waited too long to raise rates when prices shot up in 2021. We can't make that mistake again, Mr. Chair, at the expense of workers. If the Fed waits until unemployment starts increasing, it may be too late to cut rates in time to save American jobs. Why shouldn't the Fed act now to prevent workers from losing their jobs rather than reacting after the fact?
So we're well aware of that risk, of course, and very conscious of avoiding it. And what we said is, if what we expect and what we're seeing is continued strong growth, a strong labor market, and continuing progress in bringing inflation down, if that happens, if the economy evolves over that path, then we do think that the process of carefully removing the restrictive stance of policy can and will begin over the course of this year.
I mean, I know we've had this conversation publicly here or privately also that, working people are hit the hardest with inflation. They're also hit the hardest when companies try to cut costs with layoffs. This town too often seems to forget that maximum employment is part of the Fed's dual mandate. Let me ask you about bank supervision.
Say more about
Senator
maximum
Scott mentioned
oil.
that. Last year's bank failures illustrate the need for strong oversight. SVB grew too big, too fast. Fed supervision didn't react decisively enough. The Fed, in response, undertook an assessment of its supervisory process to identify and address gaps related to the speed, the force, the agility, if that's the right word, of its supervision. Explain what concrete steps the Federal Reserve's taken to strengthen supervision and any specific areas where work to make improvements is ongoing.
So this is a very broad area of work. There are, many people in the Federal Reserve System who are involved in supervision, thousands of them.
They're doing nonstop call buying at the moment.
So there's been careful study and thought and a lot of listening to understand how we can meet those goals of being quicker and more effective, basically, is how I would say it. If you look at Silicon Valley Bank, we weren't quick enough and we weren't effective enough where we were in. And so we're working hard to develop a new rule book and another set of practices, which is still going to be evidence-based and fair, but it's going to involve earlier interventions and more effective ones. And I think this is work that's ongoing and will be for some time.
Thank you. The job of the Fed, of all public officials, is to serve the American people, not their stock portfolios. We've seen abuses in this body. We've seen abuses at the Federal Reserve. I wrote to you last month.
Actually,
asking
calls
the Fed
are
to
selling
identify
off at a
substantive
pretty rapid rate.
penalties for board officials who violate the trading rules. Where is that in the process? And I expect these rules in place before the next monetary policy hearing in 6 months. Where is it?
We got our own Inspector General gave us 6 things to work on. I read the list from beginning to end, and the 6th one was what you said, and I just said we're going to do all of these. Let's get going. So we've done 5 of them, and we're working on the 6th.
And it will be finished within 6 months when you're back?
I want to get it right. I certainly hope so and expect so.
Expect so is a better answer than hope so. One last question. More and more, many companies use algorithms that combine competitors' price information to engage in what they call dynamic pricing or surge pricing. You know that corporate PR teams worked hard on this. Just another way for corporations to make it harder for consumers to seek out lower prices and to pad corporate profits. Are you concerned that the wide adoption of these price gouging strategies, these pricing schemes, if you will contribute to inflation?
I mean, I think it works both ways. Let me say this, we're well aware of this trend and we're monitoring it. Remember that prices go down when there's no one in the store, and they go up when there are a lot of people, if you're doing dynamic pricing. Same thing with the ride companies. It works both ways. I don't know that it have implication for, for inflation. It would certainly have implications for consumers who need to be informed.
You think that this kind of surge pricing might lower prices overall?
I mean, that's my understanding is that the idea is
Anybody go long Wendy's
in
double
slow
bacon
periods,
cheeseburgers?
prices actually go down, and in higher period, in busy periods, they go up.
But these are sophisticated economists working for these big companies, and they're not going to do things to lower their profits.
I think the price mechanism is incredibly important in our economy. I think we need to give companies the freedom to do that as long as they're not fixing prices or failing to disclose the nature of the price changes to the public.
I have a few seconds. Research has indicated constrained supply was behind a significant amount of the inflation we've seen over the last few years. If the supply chain, for instance, of autos had been more resilient, or if there had been more housing availability, would that have made your job easier?
Yes, in a word. Yeah, a big part of the inflation was, and we saw it in 2023 when the supply chain problems unwound and when the labor supply shock that we had unwound as well. We saw inflation come down very quickly in the second half of the year. But it's also down to tight monetary policies playing a role as well.
Which leads me to the plea with you to speak out about inflation, about the contribution of corporate profits and greed to inflation. Thank you.
Oh, I know you are done. That's true. Well, I was
Find yourself agreeing with me more and more often? Is that what?
that would be a nightmare, and I'm awake. So what I would say, however, is that the fact of the matter is that so often, if in fact 60%, I actually listened to what you said, which was remarkable. The fact that 60% of Americans today can't afford a $1,000 emergency, I can't imagine how the average millennial affords a down payment for a home. I can't imagine how they take into consideration when they're looking at a snapshot of their financial future.
Call selling off, price goes up, makes sense.
Or having a plan for obsolescence.
So
happens for every homeowner in the
it's
country.
aggregate data. So the aggregate
I
of
think
calls
the issue is
are
far
being
more
sold,
complicated.
but that's out of the money,
I
right?
would love to delve into that
If some calls are
over
being
the next
bought
4 minutes and
in the
18
money,
seconds. But my first question is
those are still going to affect
the
price
challenges
more
of
than the out of the
illegal
money
immigration
calls sold.
and crime. It seems like every
Even if
single
these
week,
are
there's
greater
another
in
story
volume.
of another city underwater attempting to feed and house millions of illegal immigrants, and American taxpayers are footing that bill. Like I mentioned in my opening statement, just recently in Denver, we saw city workers having their hours essentially zeroed out so that the city could allocate more resources
Yeah, Google is kind of going
for
up.
the illegal immigrants. In San Francisco, they say that the average cost between San Francisco and Oakland, because of crime, is almost $4 billion. Couple that with in New York, you see
Billion.
Governor Hochul bringing out the National Guard and the state police to help reduce the impact of crime. At the same time, Mayor Adams says he needs more money because the state of affairs from illegal immigrants in the city is devastating the economy, scaring the citizens, and reducing the opportunity for business as usual to return to New York City.
Just grant
So my
all illegal
question is,
immigrants
can you
full
explain how
amnesty, make
our
them
economy is
taxpayers,
expected
problem
to continue
solved,
shouldering
easy
the burden
peasy.
and the costs.
Yeah, then they can be as miserable
because
as the
of
rest
illegal
of us.
immigration. And what, if any, information do you have as it relates to the impact of this surge of crime in our major cities on the economic outcomes of those cities. Because I heard the discussion that when you have more folks in the store, you have more shoppers, except for these days when you have more folks in the store.
But then we'd have to pay them
sometimes they're just
more.
there to steal.
Yeah, true.
So you quoted my statement earlier, and it was an accurate quote, for which I thank you. But I would say right before that, what I said was immigration policy, very important, very much under
But you
discussion.
built me a
It's none
yurt?
of our business. We don't set immigration policy, and we don't comment on it. So,
But you commented on immigration. So my point, though, is that when you're going to tell a story, please tell the whole story, especially when the nation is frustrated by nearly 10 million folks by the end of this year coming into the country. And
That's
having
on Palin's
kind of
here. I think
negative
they announced
impact
last
on
night that they're
prices,
providing
on
data
crime, on the challenges that everyday
OpenAI.
Americans, especially Americans living in the poorest
Has that had
parts
an
of
effect on their
America,
price
face on a
today?
daily basis.
So as you accurately quoted, I was referring, I said over time. So I
Yes,
was
sir.
referring to the history, which with you agreed. So
A little bit.
I was staying as far as I possibly could from the current political context. And, you know, it's really not appropriate for us. We're independent. We like to remain that way. And the way we do that, one of the ways is by staying out of political issues that we really aren't assigned. And so the kinds of issues you're talking about are very, very real. I don't deny that, but they're
Big
really
bump
not
in
for us.
Delta yesterday.
So the Fed does not consider the impact of 10 million illegal immigrants coming to our country and the costs associated
Looks like
with those
Palantir is
illegal
going to
immigrants,
test
nor do they
GM again before
consider
anything else happens.
the impact on states like New York or
2750.
California or Illinois, where the devastation of crime ravaging the poorest Americans has an impact. We don't take that into
Kind of
consideration.
already did this
So,
morning.
you know, we do, and so does the Congressional Budget Office, we do try to estimate population, and we try to estimate the effect of immigration, legal or illegal, on the size of the workforce and on GDP. If you look at the Congressional Budget Office.
Getting
has
to the
as you
point where they
probably
can
know, a
clear
detailed
FTDs
assessment
with
of
less
things like
pain.
that.
I
We don't
mean,
really have a
successfully,
way, and
yes.
we do look at the finances in the aggregate of
The
state and
last
local
big
governments.
wall of
That's in the
sold
hiring
calls
they
that were
do.
still in the money
So that's
was at
something we look at,
$8.
but we
So
wouldn't do a
today we're
very
just
specific assessment
a
like
tiny
that.
bit below
CBO
that.
probably would, but we wouldn't do that.
Thank you.
Scott, Senator Menendez of New Jersey is recognized.
Thank you, Mr. Chairman. Before I begin my questions, I want to celebrate that in the past year, we
Chick-fil-A
have seen the
spicy
first
dressing. Will it
Latino
ever come
Federal
back?
Reserve governor and the first
I don't
ever
know.
Latino Federal
I haven't been to a
Reserve Bank
Chick-fil-A
president.
in
These
like
are
4
historic
years.
milestones that show we are finally making progress, something that I have been at for quite some time, to the leadership of our economic institutions. So I want to applaud that. And Mr. Chairman, I hope that progress can continue and extend to the rest of the Federal Reserve staff.
Thank you.
I agree with my friend, the ranking member.
Did I cross
that
off
when you tell a
diversity?
story, you should tell the whole story. Mr. Chairman, are you aware of the Washington Post February 27th article that says the economy is roaring and immigration is a key reason?
I don't recall that, but I would have read it.
Let me read it to you. Immigration has propelled the U.S. job market further than just about anyone expected, helping cement the country's economic rebound from the pandemic as the most robust in the world. It goes on to say, economists and labor experts say the surge in employment was ultimately key to solving unprecedented gaps in the economy that threatened the country's ability to recover from prolonged shutdowns. Would you take issue with those statements?
I went and got a
There are a lot of
bagel.
adjectives and
You
adverbs in there
prick.
that you wouldn't see in Fed world. But the
Take out the adjectives and give me on the
yeah,
substance.
the story is, I think broadly, that it is that there was a very significant increase in the size of the workforce last year, and it was happening all during the year, and we were wondering what it was. And
Why
the
are we
answer was
talking
it
to
was
the
really two
guy
things.
that
It was,
controls interest rates about
labor force
immigration?
participation.
It's
But
like
it was
asking
also
me how to please a woman.
Immigration, and if you look at the Congressional Budget Office numbers, it kind of makes sense because there was a lot of growth. Wages were coming down. The economy is
Oh,
bigger.
Carl.
And those are probably in part effect. This is without making any judgments on immigration or immigration policy, but I think that's an economic
I'm not
fact.
suggesting that. I'm just suggesting the facts
Wait,
are.
BNED
we had, 10,
rescheduled
11
their
million
earnings?
jobs that were going unfulfilled in our economy. They lacked the productivity that is necessary for success economically. And as part of that, clearly, immigration helped fuel part of our revival coming out of the pandemic. In fact, those were the people who were the essential workers when the rest of us were staying home. So I agree we need to do what is necessary to have a regularized border. But I also think that just to create the context of immigration as a scourge is absolutely wrong. Let me turn to another question. In my view, the sticky inflation we've been seeing in the housing sector is principally due to the massive nationwide housing shortage. The Fed's monetary policy report attributes the shortage to restrictive zoning, high interest rates, and tighter underwriting by banks. I would also add to that list underfunding of key HUD programs that shore up
Express
and
got
expand
immediately
our
delisted.
supply of affordable housing. If the housing supply shortage continues to grow, are we likely to see continued housing inflation?
Yes, we are.
And housing is already becoming less and less affordable for low and middle-income Americans. According to the National Low-Income Housing Coalition's 2023 outreach
no
report,
warning,
a
nothing.
worker earning the minimum wage in New Jersey would have to work 2 full-time jobs to afford a modest one-bedroom rental home at fair market rent. Do you agree that increasingly unaffordable housing is a problem for the economy?
I think there are two things going on. One is a longer-term housing shortage, and the other is the pandemic effects and the associated higher interest rates, which are things that will pass through. When all that passes through and rates are normalized, we'll still have the underlying housing shortage, and it's going to be causing upward pressure on housing prices.
Now, the monetary policy report noted that, quote, home purchases
Did you say it
by
was an
low-income
express
households have fallen
delisting?
disproportionately more.
It
because
happened
mortgage
very
lenders
quickly.
impose
It
maximums
was
the
based
ratio
on market
for borrowers'
cap.
debt service payments to the borrower's income. I'm
They
worried
got a
about how this
30-day
dynamic
notice.
will
When?
interact with the recently proposed capital requirements proposal, which, according to analysis from the Urban Institute, would disproportionately increase the cost of mortgages for Black, Hispanic, and low-income
I haven't been
moderate,
paying attention,
borrowers.
but I
Given
didn't see any
isn't there a
news.
risk that if the capital rules implemented without changes, that it could make it even harder for disadvantaged borrowers to attain home ownership?
There is a risk like that, and we're
419 is
very
not
focused on it.
quite enough
And hopefully you're
time.
working to mitigate it.
Yes.
Thank you.
Tom. I think it's like 43
Senator Rounds
DTE.
from South
It could be okay, but you
Thank
might
you,
have to
Mr.
roll
Chairman. Chairman Powell, welcome back. Look, first of all,
Maybe
I've appreciated
nearer
way
the
that
money,
you've
it's
approached
better.
Discussions in front of this committee, and I understand your desire to stay as neutral as possible with regard to the politics involved in an election year. But I do have some questions here, specifically with regard to the Basel III endgame
According to
proposal.
BNED's announcement, they're
An
just going to
analysis of
announce
that
a new
proposal,
date for the
Found
earnings.
that 97% were either opposing it
And
or
a press
expressing
release, which
substantial
isn't out yet.
concerns. In the hearing last March on the monetary
No impact to the
policy
stock
report, you
price, though,
stated
so it
that
doesn't
the
seem
Federal
like anyone's
Reserve
worried
is
about
a
it.
consensus organization, and you said, and I quote, I will do everything I can possibly possibly to bring people together in consensus
I think we
and
bounce
have
off a
a
new
capital
all-time
framework
high on
that could be
SVX.
broadly supported. My question
Are they
to
grinding
that
SVX
is,
right
do you
now?
currently
Is the
believe that there is a
tighter
consensus on
target
this
higher
capital
than
framework?
5150?
I believe that we will
Thanks.
have one. I'm fairly confident that we will
I
have
don't
such
think
a
that the
consensus,
target's higher than
when
5150
we
right
do
now.
move forward.
So
There's
we could
not
expect that you will
like a lot of the
probably
out of the
not
money
call a vote
positioning's
on the
already broken
proposal
down,
until you
but
believe that there
the
is a
target might
consensus.
be 5150.
I think that's right. I mean, we're just
There's
in
still
the
quite a
process
lot of call interest in that
digesting
range.
the comments and then making the appropriate changes.
Thank you. As
Some
you
resistance
are
at
aware, I've weighed in
45.
several times on the concerns that I have with regard to Basel III endgame, including I'm concerned about the lack of transparency, the negative effects on mortgage lending and home affordability by disincentivizing banks from offering high loan-to-value loans that primarily help first-time home buyers.
Did you see the guy in charge of
and low to
Microsoft's
moderate
AI
income
image
borrowers.
generator
I'm concerned that the proposal will make
wrote to the
buying a home
FTC to
harder
complain about
than it
JFresh's
already is for
work?
many.
No.
And further down the road, I fear that it could disincentivize mortgage lending from the largest banks, particularly with regard to
You mean his
secondary market
penises?
and their impact on even
Like his
smaller
cat
banks that do
penis
business with them.
images?
would you be willing to withdraw the proposal or re-propose with significant modifications, particularly addressing the concerns that I and others have on this committee, raising specifically with regard to the impact? And I'm thinking of Freddie and Fannie in particular and what the impact might be. What would you see as the process involving those particular issues?
So on those issues, we're well aware of and very focused on those issues. We haven't decided what to do about that yet, but we get it on those issues. In terms of process, we're not at the stage of making that decision. I will say, if it turns out to be appropriate, when we get to that point, for us to repropose parts or all of the thing, then we won't hesitate to do so.
Okay, thank you. Makes me feel a little bit better because I do think there are some very serious problems that would occur if the Basel III endgame as proposed goes into effect. And I most certainly am hoping that the Federal Reserve will find a consensus on this. And it sounds like that may very well include some significant modifications if it were to be brought at all. Is that a fair statement?
I expect there will be material and broad changes to the proposal before it comes back to the committee for consideration, the board for consideration.
Thank you, sir. Let's just, with regard to the economy today, a limited level of price growth is believed to help facilitate
Yeah,
economic
I
expansion,
didn't see.
reduce the risk of recession,
don't know.
and help businesses and consumers plan. However, during the Biden administration, we saw inflation climb to 13%, and those prices are now the new norm. I know that you make it a policy not to comment on the administration's fiscal policy, but it is well known that I really do believe that high inflation and high prices have been a direct result of President Biden's policies. Failed.
I don't know. It might just be the
that
expiration
the
you're
Federal
looking at.
Reserve and that the Federal Reserve has limited tools to address some of the problems that these policies create.
I'd say, yeah, most of the volume on Beyond looks to be around
on these costs.
March 15.
What have been some of the unintended consequences from raising the federal funds rate as rapidly?
Not a
as you
ton
felt
of
that you
volume on
had
the
to
April
as
contracts,
the
but a little
chair and as
bit.
the committee. What are some of those? I know that we talked a little bit about SVP and the failure there, their inability to look at treasuries and the increasing interest rates and so forth. But can you talk a little bit about some of the things that you've seen that were negative with regard to trying to respond to those high inflation rates?
Yes. So
The
high interest
$13
rates are
June
hard for
contracts got
businesses,
some
they're hard for
interest.
people. They're the thing they're the tool that we have to use to bring inflation down. And our job at this
April's
time,
got a little
when
bit of
high
volume
inflation
today. I mean, there's not a lot
it
of
is the Fed's job to
volume on
restore price
Beyond
stability,
anyway.
and that's what we're doing. You point to the losses in banks. That was a very substantial thing, and obviously the supervisors, and that was us, didn't get to that problem. We were aware of it, but we didn't probably appreciate it enough. Another surprise, though, is that we were able to get this far and get inflation down this quickly without seeing a big increase in unemployment, and that's just a great result.
Puts
That's
on
just
AMD.
a surprise. It's not consistent with the historical record, but it's a really positive thing.
Thank you. And I would just know that the only tools you had available were demand-side tools.
Yeah, that's right.
Thank you. Thank you, Mr. Chairman.
Thank you.
Senator
Starting
Warner,
to
Virginia's
fail.
recognized.
Well, thank
Give
you,
me a
Mr.
second.
Chairman Powell. It's great to see you. I would point out to my good friend from South Dakota, I do think, if we'd gone back a year to 18 months ago, nobody would have predicted a soft landing. And I know you're not ready to declare victory by any means, but the fact that inflation has come down, and I actually think some of the things like the CHIPS bill, the infrastructure bill, and some of President Biden's policies have actually kept the economy growth rate at the levels that have allowed you to bring down inflation without seeing a dramatic rise in unemployment. And again, that'll be something we'll probably have the opportunity to litigate over the next 8 or 9 months. I want to take my time on issues around less about monetary policy and more about regulation. I think we can never presume that we're out of the woods on financial stability, as we saw with the New York Community Bank yesterday, the stock plunge and then the capital infusion. One area that I raised with you a year ago, I want to re-raise today, and that is non-bank lending. The fact that non-bank lending in terms of to non-financial firms now is actually exceeding regulated bank lending. And let me be clear, I've got, the the non-bank financial sector has done productive things in our society over the years. But when folks like former New York Fed President Dudley and former Fed Governor Grosvenor recently said that they had worries about this reliance on the non-bank financial sector could lead to overall economic lack of stability. I guess, what do you think? I got a three-part question. What do you think are the risks as we see this push-out effect of more and more lending going outside the regulated perimeter to the non-bank sector? How much do we really know about these institutions? And one of the things, they have very smart,
I mean, so
sophisticated
yeah, you
investors,
could
those very
short
smart,
AMD,
sophisticated
but
investors said, hey,
it's
we don't like the
kinda
lending
risky,
profile right
so-
now, and we want you to not make any additional loans for the next 6 to 9 months. Do you think our system would be able to pick up the slack?
So we have the regulated banking system where you've got a lot of transparency, you've got deposit insurance, you've got access to the discount window and all those things, regulation. If you go outside that, most of the funding that we see now in these vehicles is sophisticated investors who are actually limited partners, meaning they can't pull their money out. They've signed a contract, they've funded these deals. And so what you see now in the non-bank financial sector is significantly, it's that kind of thing. So it doesn't have the run risk. The point is, the bigger it grows and the more diverse it gets, it is happening outside the regulatory perimeter, and you worry that when there is another crisis, you'll be surprised, but there will be ways that financial structure too can break down, and it does break down in ways we don't anticipate. So I think we need to be smart about the way, about intermediation is absolutely moving out of the banks into the capital markets and into non-bank financial institutions. That's what's been happening for a long, long time. I just think we need to be thoughtful about understanding where the risks are emerging.
And that sophisticated investor may rightfully say, hey, we don't want you to lend anymore for a X period of time, but that may then, at that moment of crisis, mean that the lending capabilities completely dry up. And one of the things I never completely understood until I got a little better explanation recently, why the large regulated banks weren't more complaining about this non-bank lending. But as I got to understand a little bit more of the, and again, I'm not per se criticizing on the non-bank lending, but many of the regulated banks actually lend to these large institutions, so they make money off of those relationships, and maybe that's again an explanation of why they're not being more critical. I only got 40 seconds left, but I would like to come back to another thing that we've talked about a lot, and that is the question of use of the discount window. I believe one of the original tools that the Fed had. I know banks say, well, we're concerned about the stigma. I've got some legislation that would actually require mandatory use of the discount window. I'd love your comment on that. And also just the idea that having the mechanics of the discount window open, potentially even 24/7, because we saw with SVB, they didn't know how to use it, but two, if they wanted to use it in the non-bank hours, could they get access?
There's a lot of work to do on the discount window. You're absolutely right. It needs to be brought up technologically into the modern age. We need to do more to eliminate the stigma problem, and we need to make sure that banks are actually able to use it when they need to use it. And those things. That's a broad work program that we're on right now, and it's very important.
I know you're working on it, but I would look forward to working more, and I'd invite other colleagues. I really do think before we start adding a whole host of the other regulatory issues, we ought to use some of the tools that are out there. You're not gone. So
God, I just checked in at the Veterans Committee. Senator Tillis, North Carolina. Thank you, Mark.
I was about to take control, Senator Warner. Welcome, Chair Powell, and Gus sends his regards. If you have time after the hearing, you ought to go by and see him. He's a dog in our office. But
I don't want to disturb his nap, but
but thank you for being here. I want to get back on this Basel III proposal. Senators Lummis, Coons, Gillibrand, and I sent a letter indicating our concerns with the current proposal. But I think it's also worth noting that the number of other organizations, a diverse group that are not normally aligned on policy. You got bank trades, National Housing Conference, NAACP, Habitat for Humanity, National Community Reinvestment Coalition, the list goes on, who have concerns with the current proposal. Here's my concern. I think we're trying to make the best of what was foundationally a bad proposal. And so I'm in the category of people who think that it should be reproposed, because I think one of the reasons why I did not support Mr. Barr's nomination is I felt like we were going to be here. I mean, it was pretty clear to me before he ever got confirmed on the board that we were going to be in this place some months or years later. And here we are. And I think that the industry felt the same way. All of these stakeholders, some of them are in banking trade, some of them are on the other side of the spectrum. So I'd like to cast my vote or provide some weight to the idea that we should repropose it. And what we ought to do is talk about the reality of increasing capital, or the prospect of increasing capital requirements doesn't concern me. I think the prior Fed supervisor had made comments publicly that maybe we needed to raise capital standards. But what we did hear in this proposal, and I heard in that dialogue, is let's deal with puts and takes. Let's talk about raising capital requirements, but let's also talk about reducing the cost of the regulatory burden today if we can do it responsibly. There's no evidence of that in the current proposal, and I think that may actually produce a different set of comments that would be instructive to a final proposal that I think realistically will include some increasing capital requirements. So over what time horizon do you think we would expect to either try to make the best of this foundation or go back and take a look at a new foundation and repropose it?
You know, we're going to work through it as quickly as we can and should. I will say it's more important to get it right than it is to do it fast. We're not in a hurry. But my guess is we'll work this out over the course of this year.
Yeah. Well, if you take a look at the outsized cost of operational risk, the long list of concerns that I have publicly and privately expressed on the current proposal, I do think sometimes it's easier to knock down what I think is a poor foundation and build a better house. So again, just wanted to make that comment publicly. I got a question about shrinkflation. I tell you, some of these words that we come up with, but President Biden's using the idea of shrinkflation and chastising manufacturers for creating smaller portion sizes for potato chips. I'll use that as one example. But if you have rising input cost, and you're not able to control that, and you're in a marginal business to begin with, and now you're saying you can't even reduce the quantities, how does a business that's not making a profit make that work?
I mean, we see inflation at the aggregate level as a mismatch between supply and demand.
Yeah.
And as we've seen supply get better and we've seen demand cool off a bit, it was very hot coming out of the pandemic. We see inflation coming down.
We saw food inflation between 2010 and 2021 at 18% over 11 years. And over the last 3 years, we've seen it at 21%. I think that we have a industry that's trying to actually provide products that consumers want, and now they're being chastised for trying to figure out how to make the numbers work. So this whole idea of shrinkflation is just confounding to me. I'm going to submit some for the record. I want to stay on time. But I have a question. I think the chair mentioned, if I misunderstood this, I'm sure the chair will clarify, but I thought in his opening comments, he suggested that stock buybacks and paying out dividends were a key factor in inflation. Do you, as just a matter of policy, see stock buybacks and dividends as one of the top 5 reasons we're experiencing the inflation we have right now?
First, I guess I see stock buybacks and dividends as just the same thing in a different form. And I don't know, I wouldn't comment on anything the chair even may have said.
Yeah. Well,
I'd like to avoid that.
I don't think, I'm not going to ask you about policy because I think you're consistent on that, but I just can't imagine that if we decided to outlaw stock buybacks and dividend payments, that would have a material effect on inflation. So I'm not going to ask you to respond to that, but there are some people that by inference you could assume that they think that would be helpful. I just, for one, I'm not an economist, but I just can't imagine that it would be, one of the things that would make your job easier. Can you at least opine on that?
Banning stock buybacks and dividends?
Yeah.
Yeah, I think that would be quite a change in our capital markets. That
Yeah,
wouldn't-
me too.
I mean, shareholders, this is just money going back to shareholders from
Me
companies
too.
that have nothing to do with it.
Okay, thank you, Mr. Chair.
Well done, Senator Tilley. Senator Smith of Minnesota is recognized.
Thank you, Mr. Chair. And thank you, Chair Powell. It's great to see you here again. I appreciate your testimony. And I'm going to focus my questions on housing and housing affordability. As you have well pointed out, overall prices have moderated considerably since the Fed began raising rates, yet housing costs have remained stubbornly resilient or high, leaving us really no closer to addressing the affordability crisis that I think that we have, and this was there well before the pandemic. Shortly before the Fed began tightening, Chair Powell, and you came before the committee, I asked you about how higher interest rates could exacerbate this unaffordability problem that we have by making mortgages more expensive and also hindering housing development. And I think that at the time you argued that we have a excess housing demand during the pandemic, and that was kind of at the root of higher costs, and that your goal, the Fed's goal, was to bring demand closer in line with supply. So my first question is this. So the housing market has cooled significantly over the last 2 years. Is it your view that it has cooled enough so that housing supply and demand is better in balance? And following on that, given the Fed's limited tools, understanding that, at what point will you think that you've done all that you can to lower housing demand? My view is that we're well past time in Congress to take action on the housing supply side, but I'm interested in how you see this dynamic.
So we're not focused so much on housing and housing inflation. We're really focused on the aggregate, which is also
Yep.
goods and not housing services. That's way more than half of the PCE inflation. There are things in the housing sector that we didn't fully anticipate. One of them just was that people in very low interest rate homes with very low interest rate mortgages aren't
I think
selling.
I'm going to close my
So the
calls
quantity
here.
of homes that's available is incredibly low, and that's why it's very little in the way of existing home sales, and that drives up existing home sale prices, but also new home sale prices. So
It's not the volume.
again, there's two sets of factors. It's the
off.
longer
I'm
run
just
issue, but
thinking
then
we're
there's
kinda running
the
into
factors
a
associated with the pandemic and the inflation and our response to it. I think as the overall inflation continues to come down and rates then come down, you'll see the housing market start to heal and get better, and housing affordability should go up again. But you're still going to be left with the longer term problem of supply.
Right. I think that's right. I mean, what I see in Minnesota is that higher interest rates are, of course, driving up the cost of construction. They're driving up the cost of mortgage rates. You're seeing people who aren't leaving a house that maybe is a little too small for them because they can't afford it, that the housing, just as you're saying, people are staying in their homes longer. And so there's sort of this double whammy of construction slowing at the same time that there is this great need to address housing supply. One of the things that is happening, it's interesting, a recent analysis by Zillow found that the monthly mortgage payment let me get this right. A recent analysis by Zillow found that the monthly mortgage payment on a home, on a $343,000 home, assuming 10% down payment, is about $2,200 a month. Okay, so $2,200 a month. That means the cost of owning a typical home is higher than 30% of median income, which is kind of the measure of affordability. And so we've got a lot of issues with people just being priced out of the housing market. So from where I sit, the cumulative issues of higher mortgage rates are just really a challenge. And until we can get to the bottom of that, we're going to have a hard time addressing the housing affordability challenge that we have. Would you like to comment on that?
Yes, I agree with all of that. I mean, home prices don't actually go into the calculation of inflation. It's really rents and
Right.
owner's equivalent rent. But
Kind of
I agree, the housing market is in a very, very difficult situation. And the sooner we can get back to price stability and restore interest rates to lower levels,
Should the long
sooner
calls
it
from
can start
Strangles
healing.
be taking profits here? We're
Thank
getting
you. Thank you,
kind of
Mr.
close
Chair.
to that. Yeah, we're starting to see a
Thank you,
little
Senator
bit
Smith.
more
Senator
profit
Kennedy of
taking on in the
Louisiana
money
is
calls.
recognized.
Up until now, they've been mostly
Mr.
accumulating.
Chairman, thank you for being here. Thank you for your
There's
services.
still a
I think
little
I've
bit of range to the
said
upside,
before,
though. Like 55,
I
60.
believe you and your team probably saved the world economy during the pandemic economic meltdown
So
when the whole
I
world wanted
might
dollars
wait a minute.
by establishing the currency
But
swap
I just
line. So I
closed
thank
my
you for
call
that.
straddle.
You gave an interview, Mr. Chairman, on February 4th of this year to CBS, 60 Minutes, I think. Is that right?
Yep.
I ordered a transcript of that hearing, which I read. I learned a lot reading it.
I didn't
You
kill
were
the
asked a
market.
question about inflation, and you asked a question about prices declining. And here was your response. I'd like to quote you, if it's okay.
This is VIX, by the way.
Quote, "So, the prices of some things will decline, others will go up, but we don't expect to see a decline in the overall price level. That doesn't tend to happen in economies except in very negative circumstances." End quote. Did I quote you accurately?
I believe you did.
Okay. Later in the interview, you were asked about the national debt. Do you recall that?
I don't actually, but I'm sure that's right.
Okay. Well, at least according to the transcript, your answer was, and again, I'm quoting you, "In the long run, the United States is on an unsustainable fiscal path. The U.S. federal government's on an unsustainable fiscal path. And that just means that the debt is growing faster than the economy. So it is unsustainable." End quote. Do you remember saying that?
I've said that many times. I think that's uncontroversial.
Okay. Later in the interview, you said, I want to quote,
I'm waiting
I will
on
just say
puts. I
this,
think we're going to get more
integrity
chop.
is priceless. And at the end, that's all you have.
Seems like someone's getting out of the carry
And
trade.
we plan on keeping ours, end quote. Is that an accurate statement?
Yes, it is.
Okay. That's why I want to ask you about the FDIC. Have you read the article in the Wall Street Journal entitled, quote, "Strip clubs, lewd photos, and a boozy hotel, the toxic atmosphere at bank regulator FDIC," end quote?
I think I did read that a couple months ago.
Did you read the article entitled, I quote again, "FDIC lawyer stayed on paid leave for weeks after child porn arrest," end quote?
I don't remember that one.
Okay, did you read the article entitled, also in the Wall Street Journal, quote, "FDIC chair, known for temper, ignored bad behavior in workplace," end quote?
This dinosaur trying to set up
Honestly,
a big
I
old
read so much,
gotcha.
I can't. I remember the broad story, but not particular stories.
Did you read the article in which a former female employee of the FDIC allegedly recalled her male colleagues saying women needed to use sex to get ahead at the FDIC?
I do not recall that. No.
Okay. Did you read the article in which a female risk management examiner
Dude, what the
during a
fuck is going
lunch
on with yields right
with
now?
a male examiner said she had become friendly with that examiner, and he complained to her about his marriage, allegedly, telling her he wasn't getting enough sex. And she allegedly said, quote, "Obviously, if I walked," or he allegedly said, "Obviously, if I walked into this office and you were naked, I'd fuck you right here," end quote.
I do not remember that, and I think I would.
Okay. Do you remember the article about Mr. Randall Ditch, a supervisory examiner in Denver, who allegedly was demoted in 2014 to a non-supervisory examiner position in
Dude, it sounds like the
Tulsa after
FDIC
having
parties,
sex
right?
twice with a subordinate female employee and a number of other
That is
rule
not on the
violations.
bingo.
In this article,
Bingo
it says,
blackouts.
allegedly, Mr. Ditch had urged the woman to not, quote, be a pussy, close quote, and drink a shot of whiskey during work hours, the records show. Do you recall that?
I do not recollect that.
Okay. Here's my question. I could go on for a while.
Could go on, but
Oh,
you're not
yeah,
going to go on, so you've
please.
passed your 5 minutes. Do your question once.
Sir?
Senator Kennedy, your time's already expired. You can do one. You did 5 minutes, consumed the whole 5 minutes with your monologue of,
Well, you did 6 minutes. I timed it.
I asked my,
You did 6 minutes.
Senator Kennedy, for months, I have let you go way over the 5 minutes. You get your question,
But you did 6 minutes.
I chair this committee.
I understand. You still did 6 minutes. Check the record.
I'm going to order, you're going to be at 6 minutes and 15 seconds if you continue this argument,
Well,
or
that's-
you're going to ask your question.
I'll ask my question. I just wanted the record to be
I love
clear,
our
Mr. Chairman.
government.
Mr. Chairman, in light of these allegations, if they're proven, how can the FDIC lead this charge for Basel III Game 3, which is going to turn the banking community upside down?
I don't know how I would make the connection to Basel III. I'll say it's deeply troubling things, obviously, but again, you know, as your point was, if proven. And I mean, I think we have to decide Basel III on its merits, and we're not looking to the FDIC to lead this, by the way. We're looking at the Fed to do what the Fed thinks is right. That's what we're going to do. We don't look to, and they don't
This
look
is
to
a
us
Senate
to
hearing.
lead them.
Thank you, Chair Powell. Senator Butler is recognized.
Thank you, Mr. Chairman.
It's even more embarrassing.
Senator Butler is recognized.
Thank you so much, Chair and Chair Powell. Good to see you in person, and thanks for the time to talk. I want to pick up a little bit where Senator Smith was in relationship to housing affordability, and hopefully draw a little bit on the point that you were making about rents.
This is nothing like the
it
I'm Just a
definitely,
Bill song from
Is
school.
an important crisis in my state of California, and I know across the country, where, at least according to the California Department of Housing and Urban Development, renters in San Diego are paying about 50%.
Hold
of
on.
What is, they're spending more than 50% of what is
Did she
considered
steal
affordable,
Jensen Huang's
and
jacket?
statewide, the majority of renters, more than 3 million households, are spending more than 30% towards rent. Nearly 1/3, more than 1 in 5 million households pay more than 50% of their income towards rent. And the Chicago Fed President Goolsbee even referred to housing as a missing piece of the puzzle in the Fed's path to lower inflation. So to the continued conversation, and I know a point that you've made that about how inflation has a disproportionate impact on lower income households who are focused on spending more of their monthly budgets on housing. How is the Fed's monetary policy impacting the supply of affordable rentals?
I don't know that we're affecting the supply of affordable housing. If you think of affordable housing as something that's connected to some sort of government program, that's not our bailiwick. I mean, clearly interest rates do affect the affordability of housing, though.
And there was a key point that you made in an earlier, I think, reference about and in your response to Senator Smith about the monetary policy and the calculation of rents. Can you just just briefly talk about that? I want to have one last issue I want to get to before I run out of time.
It's hard to talk about it briefly. It's actually very conceptually challenging to think about housing inflation. Do you include the costs of financing it? Do you include the sale prices? And the answer is we don't. We convert ownership into an imputed rent, and that's 2/3 of homes are owned. And then we actually measure rents, but leases only turn over once a year. So you look at market rents, and what's happening with newly signed leases may be very different from what was happening a year ago. So it's complicated, but the good thing is we understand all that, and we look through that. We look at housing services overall as one of the 3 important categories, along with non-housing services and goods inflation.
Thank you for that.
Ballywick.
And in the line of affordability and housing, again, sort of very general, I think, to the broad monetary
said banking
policy
and
in favor of
financial
our economy
services.
and unique to
Punked.
California. And I raised this with Secretary Yellen when she was here
My
as
data
well.
was up to date as per
insurance
the latest
gaps that
IMF
are
survey.
presenting themselves due to the impact of climate change. Where 1 in 5 residents in California live in areas of that risk flooding, and all 58 counties have a history of flood damage. And we are seeing more and more insurance providers, home insurance providers, actually withdrawing from the state. You and I had talked a little bit about this in our preparation for today's conversation. Can you talk to me about or share with us how it is or what you think the impact might be of this sort of protection gap in insurance coverage on the overall stability of financial institutions in the broader economy?
So it is clear that insurance of various different kinds, housing insurance, but also automobile insurance and things like that, that's been a significant source of inflation over the last few years. And it's to do with a million different factors. It's nothing that we control from a regulatory or supervisory standpoint. In the longer term, companies are withdrawing from writing insurance in some coastal areas, and you got to think 10 years from now, how are you going to get housing insurance? And maybe the government will have to step in, but it's a significant issue.
Thank you, Chair Powell.
Thank you.
I was.
Senator is next. Yeah, Vance. Senator Vance of Ohio is recognized.
Thanks, Mr. Chair, and my gratitude to you and the ranking member for doing this hearing. And thank you,
Oh, is
Chairman
this the
Powell, for being here. It's good to
Appalachia
see you
guy?
again. I think these hearings are always very important.
Why does he
Actually,
always
it's
look
an
so
opportunity to
confused
sort
in
of
the
provide some
paperwork he's looking
oversight,
at?
to what's going on at the Fed and better understand some of the things that you guys are doing that affect our constituents. Now, I wanted to sort of focus on the Basel III regulations, Chairman Powell, and specifically the way that
He
they
said
have,
my constituents.
there have been various proposals to sort of draw them down to focus on the regional banks. And to just go back to sort of one of the most significant crises, obviously, in our banking sector, of course, the collapse of SVB and First Republic. You and I have spoken in private and I believe in public, but one of the concerns that I have is when we talk about increasing capital requirements.
Every time the guy
banks,
picks up papers,
if the
he's
banks
like,
were under higher capital requirements in the run-up to the crisis, there's maybe an argument that SVB, for example, would have bought more long-term treasuries, which would have exposed their balance sheet to even more treasury bond risk. And that, of course, would have maybe hastened the collapse of SVB. And I guess I want to start here with, when we talk about, some of the Basel regulations, what was the original intent? In other words, what was the original sort of proposal for which banks would fall under those regulations and which would escape them?
You mean this time around, or earlier on?
This time around.
So it's the 37 largest banks. It's down to there's 4 categories of banks, including the G-SIBs, and this is down through the 4th category. The proposal that's out there now, I think, does extend to Category 4 as well as 3, 2, and 1.
So what's the minimum assets under management that you guys have proposed, the current
billion.
Basel regulations?
100 billion.
100 billion.
Yeah.
And sort of that sort of gets to my concern here, because I know there's some discussion about whether you'd apply them at $700 billion of AUM or $100 billion of AUM. And maybe you could just sort of walk me through that decision process at the Fed, where you guys are and what would sort of justify drawing down from a $700 billion threshold to a $100 billion threshold.
So there's the G-SIBs, there's the 8 identified G-SIBs, and then there's one category too, I guess, and then there are the big regionals, and those tend to be well-known big regional banks, and they're Category 3, and one of them's a 2, I guess, but they have a different tailored level of regulation, and then Category 4 had significant tailoring, and the question is, we have to ask the question, since SVB was a Category 4, we've got to ask the question, what, if anything, needs to be changed in the way they were regulated, supervised from a capital and liquidity standpoint. So there was tailoring all the way down, and then below 100, of course, those are community banks, and that's a different regime as well. This makes sense. We want to have a diverse banking sector. That's a great benefit to our country, and very unusual for an advanced economy. So it's something we want to preserve.
Yeah, and I'm sure you know, Chairman Powell, but just to put this on the record, I mean, a lot of the commercial lending, a lot of the real estate lending, a lot of the consumer lending, about half of that lending, consumer lending, is provided by the regional banks. I believe that Huntington, in my home state of Columbus, is the #1 SBA lender in the entire country. So these, to your point, I think these do provide incredibly important benefits to our economy. And you hear a lot of people talk about the American economic miracle, and I do wonder if part of that is because we don't have the same type of financial system that has sort of dominated in Western Europe and other first world economies. I'm curious, in the process of amending the Basel requirements, I mean, have you guys made a decision about where to set the threshold yet, and when do you expect to set that threshold?
We haven't made any final decisions. We put out for proposals some months ago, a proposal, and we've gotten a lot of comments, as I'm sure you're aware. We're chewing through those and digesting them, and we're just beginning now to sit down and talk about the changes that will appropriately make to the original proposal.
And when do you expect to sort of issue a final proposal?
I think it's going to take some time. I think it's more important to do it right than it is to do it fast. My guess is we'll get through this and be done over the course of this year, but it could be faster than that. It could be slower than that. So
I'm wondering, just being mindful of time, I have about 30 seconds left. Would you be willing to commit to say that in the process of amending, the Fed will remove the regional bank drawdown and limit Basel's application directly to the G-SIBs or $700 billion or above?
I can't get that specific at this point, but we're clearly looking at the whole tailoring issue.
I appreciate that. And again, I just repeat, Chairman Powell, given what actually happened with the banking sector,
Every time
with
this
SVB
happened,
and
I
First
become
Republic,
more and more disgusted
I
at
just
our
encourage you guys not to
representation.
apply
There are only like
a
3
regulation
people
that
actually
doesn't
try to
solve
do
the underlying
anything
problem.
good
I fear
for
that if
their
you apply this to banks of
constituents.
$100
The
billion
rest
and
are
above, you
bought.
actually are doing just that. So with that in mind, I'll yield. Thanks, Mr. Chair.
Thanks, Senator Vance. Senator Tester of Montana is recognized.
Even those
Yeah,
3
thank you,
probably
Chairman
bought
Brown,
to
and-
some
and
degree.
Thank you
Just
for being
different
here,
issues.
Chair Powell. We appreciate your work.
My home state of
Difficult
Columbus.
situation, but I think
Where
you've
the hell
done
does he live?
a really good job, and so thank you for that. Look, at success at the Fed on your mandate for strong employment and stable prices is critical for small businesses on Main Street, for farmers, for ranchers, for Montana families. You follow all the metrics. From your perspective, where is the economy at now, and where's it going?
The economy's growing at a healthy, sustainable, solid, strong pace, and that's one thing. Second thing I'd say is the labor market is very strong and quite tight still. 3.7% unemployment for the last 24 months. That's the longest period since 50 years. And the third thing is inflation. Inflation was too high. It's come down very sharply since the beginning of last year. If you look at the 12-month number, the headline number has come down from the 5s down to 2.4. And the core number is at 2.8. I think it was at 4.9 a year ago. So these are big declines. So we're in a very different place, in a healthy place. We're going to use our tools to try to keep that strong economy, keep that strong labor market, while we continue to make progress on inflation.
One of the areas where there has been inflation, and I don't exactly know where it's at now, but food rose quite rapidly. And by the way, I'm a farmer. We didn't get much of that. In fact, we didn't get any of it. Prices now compared to what they were a year ago are actually off. Compared to where they're 6 years ago, they're up. But compared to where they were a year ago, they're down. And so my question to you, Chairman Powell, is there anything you can do specifically to deal with food costs?
So as I'm telling a farmer his business, but if you look at the food cost to the consumer, part of that is commodity costs, and that was partly spiked because of Ukraine, grains and oil and that kind of thing. But the rest of it is a lot of costs in the supply chain from when it leaves the farm to get
some similarities,
collected and processed and trucked around and then put on the shelves and
there's
then
still
stores.
a lot of out of the money.
And all of those
pet-side
costs are just
straddles,
part of the general economy. So
some of
as
them
the
got
labor
blown up
market
this
cools
morning,
off
but others
from
didn't.
its overheated status 2 years ago, you will see, and you have seen, food inflation flattening out. And so, the really high rates of inflation have come down. The prices, of course, have not.
Correct. I would just say that cattle's doing better. Grain actually has dropped in price at the farm gate, and I don't want to get into that debate with you at all because we probably agree. but
Oh,
it'd
the
take
full
too long,
opening
take too
speech
much
was
time.
about
We got other stuff
Bidenomics.
to talk
I
about.
missed it.
You've discussed in previous hearings the impacts that the pandemic, shutdowns and supply chain issues have had on economies globally. How does the U.S. economy look today compared to our competitor nations, particularly China?
Well, I start with the advanced economies. We're doing the best of anybody. We've got the strongest growth and the lowest inflation of the advanced economies. China is a whole different story. China is having, significant difficulties with its economy right now, and they're in a very different place than certainly than we are.
And so, to repeat that, what I heard you say is that the economy of the United States is basically in better shape than any other economy in the world?
Any other major economy, yes.
Yes, okay. Look, one of the other challenges out there is housing in communities all across this country, whether you're in Montana, whether you're in a city in Ohio. Workforce housing in particular is a top priority, top commodity, so to speak. Plenty of folks, great organizations are working to address this. I meet them every day, and I appreciate the work they're doing. But how do these housing supplies issues show up in the data that the FOMC uses to make decisions?
So housing prices
What the fuck is
don't
that?
go into the data. Housing starts and renovations and things like that are just business activity, and that shows up. But when it comes to inflation, we convert ownership into an imputed rent, and then we look at rents. And so that's how we look at all that. So we're not directly affected by changes in housing prices, but over time those will drive rents up.
So is it fair to ask, are there economic trends that you see for housing?
Yes, so there's two big things going on. One is we have this underlying shortage of housing, and it's due to things like difficulties of zoning. A lot of the close in to cities, places are already built, and so more difficult to get zoning, more difficult to get people and materials and all that. That's one thing, and that's not going away. Then there's just a ton of things happening because of the pandemic, because of inflation, because of higher rates. And those are, in the short term, those they're weighing on the housing market. But as rates come down and that all goes through the economy, we're still going to be back to a place where we don't have enough housing.
Well, once again, thank you, Chairman Powell, for your work. I very much appreciate it. Thank you, Chairman Brown.
Thanks, Senator Tester. Senator Kramer of North Dakota.
Thank you, Mr. Chairman. Chairman Powell, good to see you. Thank you for being here. It's been a rather uneventful couple of days for you, considering you've spent 2 days in this place. And I'm not going to upset that, by the way, just so you know. But I did appreciate your response earlier to Senator Scott when he asked about immigration, and you said the Fed hasn't been assigned that. So I want to bring up something
Why
else.
the
you
fuck
haven't been
is
assigned to
North
that you and I
Dakota
talked over
worried
the
about
years, and that, of course, is
immigration?
climate, the role of
No
climate.
one wants to go there.
In your job, the role of climate risk in banking. And you've often said, I think the
No one
most common
spends 30
statement
days
was,
riding in
"We
the
should
back
stick
of
to our
a
knitting." I think
container
it's one of your,
on a
stay in our
truck
lane.
or in the trunk of
similar
a
to what you said
car to
probably
move to
Senator
fucking
Scott.
North Dakota.
But that said, in October, the Fed, the OCC, FDIC issued climate guidance, as you know, for management
Maybe
of
Canadians
covered
are jumping
institutions.
over the border.
And so I'm just kind of curious, did Congress somewhere along the line give the Fed authority over climate policy as well? Or is that another one of those things that somebody just took on? And I realize you're not the dictator of the Fed, only the chairman of the Fed. But I'd be interested in, as the chairman, your views on it.
Our assignment is the safety and soundness of banks, and that they understand and can manage the risks that they face. That's our assignment. And we said in climate world we would do two and only two things. One of them was to do illustrative stress scenarios, not stress scenarios, climate scenarios, so that
Does the Fed
the
dictate
banks are
climate
already
change
doing this.
policy?
Large banks
No.
who are subject to this, they're already doing it because they're doing business internationally and they don't have any choice. So we said we'd do that, and we also said that we'd offer guidance on not on level of climate risk or anything like that, just on what you had to do to be in a position to assess. And that's, for my thinking, that's it. That's what we're doing. And we're not doing it. There are no new initiatives. We're not going to change our capital requirements to reflect climate risk or anything like that. I'm really determined that we are not a climate policymaker, and that is really the business of elected officials.
Very good, thank you. I'm going to bring up one other topic. I don't know that's been brought up today, and that's central bank digital currency. I think from a lot of my friends out there, I think there's some, well, I know there's some confusion. I mean, I'm easy to confuse, but there are a lot of people that get confused about what is meant by the administration's, admonition to continue researching, experimenting, looking at some sort of a, central bank digital currency. I think people back home look at that and go, oh my gosh, they're going to control this now. And could you maybe just differentiate a little bit what people think of in terms of a Bitcoin or their held digital currencies versus what a central bank digital currency, who, in my view, should emulate cash, right? It still should be about the dollar, not about some different kind of currency. Could you just sort of help people back home better understand why they should be quite so frightened?
First of all, I want to say that we're nowhere near recommending or
Right when you guys are like, wow,
adopting
the Congress is really embarrassing. Remember, these are United States senators.
Money has become digital. So, but the government doesn't issue digital money. It's digital. If you look at your bank account, people don't hold those physical dollars. They're digital. So the thought was that the government could create a digital form of money that people could then transfer among themselves. Now, of course, that raises a concern that if that were a government account, that the government would see all your transactions, and that's just something we would not stand for or do or propose here in the United States. That is how it works in China, for example. But that's not if we were to ever to do something like this, and we're a very long way from even thinking about it, we would do this through the banking system. The last thing we would want, the Federal Reserve would want, would be to have individual accounts for all Americans, or any Americans for that matter. Only banks have accounts at the Fed, and that's the way we're going to keep it. So it's just really, it's a question of following technology as it evolves, and in a way that serves the public better. People don't need to worry about a central bank digital currency. Nothing like that is remotely close to happening anytime soon.
That was very helpful. Thank you, Mr. Chairman. Thank you, Chairman.
Kramer. Senator Cortez Masto of Nevada is recognized.
Thank you, Mr. Chairman. Chairman Powell, great to see you again. Thank you for all of your good work. I want to talk a little bit about the commercial real estate and what's happening there. The Financial Stability Oversight Council's 2023 annual report identified commercial real estate as a financial risk. And the Fed's monetary report also noted commercial real estate prices continue to decline, especially in the office, retail, and multifamily sectors. I'm especially concerned that because of the low levels of transactions in the office sector, prices have not yet fully reflected the true decline in the value. So can you expand on the emerging risks the Federal Reserve has identified in the commercial real estate market, one? And then I'm curious, can you discuss the compound risks identified in commercial real estate lending, particularly at banks with large CRE concentrations and high fractions of uninsured deposits?
Sure. Let me say, I think there are just very, very few transactions in commercial real estate right now, particularly in the troubled areas. So it's not a question of prices still falling. It's a question that you don't have the kind of price discovery. You just have to assume that the prices are very low and have come down a lot. So on commercial real estate, we have a secular change in people working from home. This is one big part of it. That means that in many cities, the downtown office district.
Although senators are rarely referred to as Congress people, even though
cities,
that is technically accurate.
Retail that was there to service the thousands and thousands of people who work in those buildings, they're under pressure too. And banks will have made loans to many of those buildings. Not all of them, but many. So this we've known for some years. And so what do? We have identified the banks that have high commercial real estate
I don't know what
concentrations,
PFOP is.
particularly
I didn't
office
write the
and
bingo
retail,
card.
and other ones that have been affected a lot. We identify them, and we are in dialogue with them around, do you have your arms around this problem? Do you have enough capital? Do you have enough liquidity? Do you have a plan? You're going to take losses here. Are you being truthful with yourself and with your owners? And so we've been working with them. And so for some time we've been doing that. And this is a problem that we'll be working on
DVN's
for
been doing pretty good.
Years more, I'm sure. There will be bank failures, but this is not the big banks. If you look at the very big banks, it's not a first order issue for any of the very large banks. It's more smaller and medium-sized banks that have these issues. We're working with them. We're getting through it.
Flow with a P.
I think it's manageable is the word I would use, but it's a very active thing for us and the other regulators, and it will be for some time.
Thank you. Do you have concerns? Let me just ask you this. As you're talking with these small and medium-sized banks, because we know there's always could be a contagion, which we've seen in the past, do you have concerns that if they fail, that somehow this is going to impact the financial sector? And are you prepared and trying to address that and prevent that from happening?
We're trying to stay ahead of that. So we also reached out to banks that had high concentrations of uninsured deposits, and particularly uninsured deposits, and a lot of commercial real estate in the office sector. So we're well aware of that issue, and we're just trying to stay ahead of it on a bank-by-bank basis and overall.
Okay.
And so far, we've been able to do that.
Thank you. Let me jump to another issue that has been on my radar. The Federal Housing Finance Agency's report on the federal home loan banks concluded that the distinction between the FHL bank's role and that of the Federal Reserve discount window as lender of last resort has not been clear, especially during times of market stress. During the 2023 banking turmoil, we saw banks rely on advances from the federal home loan banks and didn't even have relationships with the Federal Reserve to use its discount window. I know you've talked a little bit about this with Senator Warner, but how is the Federal Reserve working with the federal home loan banks to ensure that banks establish protocols to borrow from the Fed's discount window prior to times of stress?
So we work with the federal home loan banks because in many cases, banks were moving their loan from the Federal Home Loan Bank to the Fed. So we need to have smooth transfer. We need to be in good touch with them. Even more important than that, though, is that banks, any bank in the United States, needs to be in touch with the discount window, know how to be able to access it, have appropriate collateral, have control of that collateral. In many cases, it was incredibly inefficient and took a long time for banks to actually go through that function. The federal home loan banks are actually ahead of us in technology. We know that we need to really invest in technology to modernize the discount window, and also we need to do more to get our banks, all of them, in touch with the discount window in a way that they can use it
Can
quickly.
we fill the gap
should
to
they
the
need to do so.
downside?
Thank you.
Yeah. Well, some of it. We already filled a little bit.
Cortez Master, Senator Haggerty of Tennessee is recognized.
Thank you, Chairman Brown. Welcome, Chairman Powell. Under your tenure, Mr. Chairman, the Fed has taken the stance that the 2% inflation target shouldn't be viewed as a snapshot in time, but rather it needs to be achieved, quote, sustainably. When inflation was running well above the 2% target back in 2021 and early 2022, the Fed was patient and allowed rates to offset the below target inflation that had occurred in the years prior. It strikes me as odd now that while we're still well above target inflation and have been well above for the prior year, markets seem to expect the Fed to immediately cut even before we've breached the 2% inflation threshold. So my question is this: if the inflation rate reaches 2%, would that be considered a return to the target rate on a sustainable basis? Or is it still the case that inflation would need to more or less overcorrect to well below 2% before the Fed makes the rate cut adjustments?
So it would take us a while to really get comfortable that inflation had settled in sustainably at 2%. But that's not our test for changing interest rates. Interest rates right now are well into restrictive territory. They're well above neutral. And we've said we would not wait for inflation to get down to 2% because if you wait that, monetary policy works with long and variable lags. So we've said, for some years that we would start restoring the federal funds rate to a more normal, almost neutral level. We're far from neutral now.
Yeah.
And so, we do plan, assuming the economy moves along the lines we expect, we do plan on starting the process of dialing back restrictions.
I'm just trying to look for the symmetry. I know we sort of allowed the economy to overshoot when inflation was high, and we sort of made up for prior years of low inflation. I'm trying to square that with the fact that
we didn't actually do that. We adopted a framework that said we would do that, but then we got suddenly, a few months later, we got almost an explosion very high inflation. That's not what we were looking
It's the new
we
bull
said,
strategy, pump overnight,
moderately
take
above,
profits,
modestly
slow
above
grind
2%.
down.
This was not modestly above 2%.
I don't think it's that
And we
new.
reacted. We thought that
it's
the mistake we
happening.
made was we thought that
Just
that
jumping in this
inflation
morning.
would
This is
go
more
away.
likely a
That
byproduct of
transitory,
the
Transitory,
excessive
which means it
neutral
goes away quicker
positioning
without effort by us. We figured out at the
surrounding
end of
these meetings.
21 that was not the case, and we acted.
And you don't see that same abrupt dynamic coming the other way. You're more comfortable with
No,
it.
I think we're in the right place, which is we're waiting to become more confident that inflation is moving sustainably at 2%. When we do get that confidence, and we're not far from it, it'll be appropriate to begin to dial back the level of restriction so that we don't, drive the economy into recession rather than normalizing policy as the economy gets back to normal.
Yeah.
The
Can we go to
video
the balance sheet,
1,000
and
end of
talk
week.
about that?
It
We've
hasn't
seen
squeezed off the
a dramatic
900
expansion
calls
of the Fed's
yet.
balance sheet over the past couple of decades. In
But if it keeps
2005,
rising,
was
it
at
probably
$800
will.
billion. It's at $7.5 trillion a day. It's doubled since the pandemic was underway. And through quantitative tapering, the Fed is attempting to reduce its footprint. And the concern I have is, on the other hand, government spending tends to just continue to be profligate. We're running now a $1 trillion deficit every 100 days. And we're flooding the market with Treasury debt, and we're putting upward pressure on interest rates as a result. And what I think that is lost on many of us here is that the spending levels will only make your job harder when it comes to lowering interest rates, not to mention there's a tacit expectation that the Fed will step in once the markets can no longer absorb our new issuance. I think this is a very serious problem. I think it deserves more attention. And I think we're now at a point where your objectives may be very much at odds with the behavior of our fiscal policy. Am I missing something here, Mr. Chairman, or does increased net issuance by the Treasury lead to higher rates?
I mean, in principle, more supply should lead to modestly higher rates, but that's not going to affect what we do. That's not a problem for us. Our balance sheet normalization is running very much as expected. We've decreased the size of our holdings by almost $1.5 trillion.
I hear you. I think it's troubling that we continue to put fiscal pressure by continuing to put, again, we're running a deficit of $1 trillion every 100 days, and the issuance is required to deal with that. We're putting a lot more pressure, I think, on the Fed. And again, making your job harder. I think we need to take that into consideration. Another component of this topic, your colleague Governor Waller said he'd like the Fed to shift its holdings toward a larger share of short-term treasuries. Back prior to the financial crisis, about a third of the Fed's holdings were in bills. Now they're around 3% of your total securities holdings. Do you share the goal with Governor Waller? And if so, how long will it take us to get there?
Take a while. That's an issue. We're in our FOMC meeting in a couple of weeks. We're going to have our first really deep dive on what to do with the balance sheet. That's one of the issues. I don't think we'll deal with that at this meeting, but over time, you'd love not to own a lot of MBS, and I could see a case for shortening.
There's a lot of calls being
it's not something that would happen quickly, and we're not actively looking at that. That's sort of a longer term aspiration that I think he was.
Just one final point, Mr.
But I
Chair.
wouldn't
I've talked
call
about
it
this before.
selling
We're
off. It's
in an
more,
election year.
most of it's
You're getting
out
a lot
of the
pressure,
money
I hear,
call
from
selling.
lawmakers to
On the
adjust
short
rates.
side,
I'm not telling you to raise rates or lower rates,
there's
but I'm
been pretty
just here to
steady
emphasize the
profit
fact that the
taking
credibility
throughout
of
the
Fed
day, but
depends on your
volumetrically,
remaining data-driven. The
it's
credibility
not
of our
as
currency as the reserve currency of the world.
A lot
depends
of
on
a
that,
lot
and
of
I
the
encourage you
profit
to continue
taking that
to make
occurred on in the money calls
Thanks,
happened like
Senator.
right at
Senator
market open.
Warren of Massachusetts is ready.
Thank you, Mr. Chairman. So it's been a year since we had the second, third, and fourth largest bank failures in American history. Greedy bank executives were part of the problem, and the Fed, as the chief regulator of the biggest banks, was part of the problem. Under your leadership and direction, the Fed steadily weakened rules for the biggest billionaire banks, exactly the banks that failed last March. In other words, Chair Powell, you failed to do your job to keep these big banks in line. Now, when these banks blew up, you went into spin mode, promising that the Fed would do better. After years of hemming and hawing, you finally agreed to put in place Basel III rules that would strengthen capital standards for the biggest banks. And I mean the biggest banks. These are the Fed's proposed rule would apply to only 37 of the nation's 4,500 banks, only the banks that have $100 billion or more in capital. Now, Chair Powell, when you testified before this committee last June, I asked you about taking responsibility for bank failures. And you said, quote, "The main responsibility I take is to learn the right lessons from this and to undertake to address them so we don't have a situation like this where we had unexpectedly a large
If
bank
she brings the
fail
market
and
down,
spread
I'm cool
contagion
with it.
into the banking system," end quote. And as part of learning those lessons, you also said, quote, "that you agree with and support," end quote, Vice Chair for Supervision Barr's
Why would I pick up
recommendations
fixie
for
calls?
strengthening the
You
Fed's
do know that
rules
like fixie is
and
not a great.
supervisory
It's like
practices
it's an
for the
equity,
big
but it's not a
banks,
great
and
instrument to
that
go
you're,
longly
quote,
on.
"confident they will lead to a stronger and more resilient banking system."
I'm
end
already
quote.
long yen
So I just want to be
futures.
clear. You haven't backed down from any of your comments from a year ago, have you, Chair Powell? Right lessons, don't let this happen again, supporting Vice Chair Barr's recommendations, which include stronger capital standards.
No.
You still stand by all that?
Yeah.
Good, good. I'm glad to hear that. Now, I understand that those 37 big banks don't like higher capital rules because they are like insurance. You know, they would make the banks safer, but they cost a little money and would nip into the bank's profits. So these 37 banks are swinging their very considerable weight around to try to weaken the capital rules. They've spent tens of millions of dollars running ads during Sunday night football and millions more for an army of lobbyists to try to twist arms here in Congress. Impressive spending, but who exactly are they trying to impress? A man on the inside? You know, despite all you said last year when the banks failed about supporting Vice Chair Barr's recommendations to strengthen rules for big banks, public reporting now says that you are driving efforts inside the Fed to weaken the capital rule. You even told the House Financial Services Committee representatives yesterday that you think it's, quote, "very plausible," close quote, that you withdraw the rule. As one analyst put it, quote, "I don't think they will pass a final rule without Powell's support."
I will say she's the only one who
suggesting that
doesn't
the
seem to
rules
be
will
bought
have
by
to
the
be
banks right
weakened,
now.
quote, "to appease Powell." So, Chair Powell, I'm having trouble reconciling the statements you made last year, which you say you hold on to, statements you made when the headlines were all about 3 giant bank failures, and now your reported efforts to quietly weaken the rules that would strengthen capital standards for giant banks and prevent more bank failures. So let me just give you a chance to clarify the record here. Are you committed to finalizing the strongest version of the Basel III capital rules this year?
Let me first say that we have taken and are taking many more steps to deal with the problems that revealed themselves with Silicon Valley Bank, and that's around supervision. We'll have a strong liquidity.
I appreciate that, but I'm just asking about the Basel III rules, the ones that you have been required for years now to put in place and have dragged your feet on.
The Basel III rules are not directly related. They're not the thing that is directly related to Silicon Valley Bank. As you point out, they're a longer run thing, and I would just say that we put them out for comment. We got the comments. Anybody's free to go read the comments. My view is that it will be appropriate to make material and broad changes to that before we finalize it. And in terms of, I didn't say that...
Material and broad changes to strengthen the rules?
Material and broad changes, and we're talking about what that'll mean in the end. I did not say that we would withdraw the rule. I said, there's a concept of reproposal, and I said we hadn't made a decision on that, but that if that turns out to be appropriate in the view of the Board of Governors, then that's something we would look at doing.
So everything you said a year ago about supporting the vice chair who is responsible for writing these rules?
You and I had a long colloquy.
Yes, we did.
If you read it again, it's on your website.
And I have.
You will see that I'm doing exactly what I said I would do in that colloquy.
You said you would support Vice Chair Barr to get us strong rules, and now he is putting out rules, and you're talking
Silicon
about
Valley Bank.
reproposing.
The Vice Chair for Supervision has every right to bring proposals to the board. That has happened, but as I made clear in our colloquy, you're not the comptroller of the currency. When I do monetary policy, I have one vote. There are 11 other voters. And that's the way it works. It's not different for the Vice Chair for Supervision.
You are the leader of the Fed, and when the heat was on last year, you talked a lot about getting tougher on the banks, but now the giant banks are unhappy about that, and you've gone weak-kneed on this. The American people need a leader at the Fed who has the courage to stand up to these banks and protect our financial system. Thank you, Mr. Chairman.
Warren, Senator Daines of Montana is recognized.
Chairman, thank you. Chairman Powell, thanks for being here. Good to see you. I can tell you Montanans are continuing to see the impact.
I mean, someone
across the
needed to
board
tell
from
Jape how to
inflation
grow some fucking
that's been brought
balls,
on by the
right?
policies of this administration.
No
and
one
by
else
colleagues
is.
across the aisle. And I commend you for the job you have done in trying to rein in inflation, and I encourage you to continue the fight despite political pressures you may face. Last time I checked, it's going to get a little more political around here between now and November. I'm also encouraged, contrary perhaps to my colleague from Massachusetts, I'm encouraged by your comments yesterday that there will be broad changes to the Basel III proposal, which, as it's currently proposed, would have significant detrimental impacts to credit cost and availability to small businesses. And lastly, I commend your answer yesterday that the Fed is not a climate agency, and considering the impact of climate change is not a factor in achieving your given mandate, congressional mandate
BNED's
of
changing their
maximum
earnings date,
employment
release
and
date,
stable
bullish.
prices.
Yeah, they announced
Mr.
it.
Chairman, I
guess
recently
last
joined many of my
night or
colleagues
today.
in writing to you about my concerns about the long-term debt proposal that would mandate regional banks issue new long-term debt. I'm concerned that this will have a disproportionate impact on smaller regional banks because they're required to hold their long-term debt
SPX
at both
is
their
trying to do a
parent holding
dumpy.
company and insured depository bank.
So far, it
levels.
hasn't. So
Could
bulls
you
are still
explain how
trying
this
to hold this
aligns
price level
with the
for now.
tailoring requirements set forth in the financial
But their
reform bill
positioning
that we
is
passed
weakening.
back in 2018, Senate Bill 2155?
So how the longer-term debt proposal aligns with that? So first of all, that's been out for comment on that one. The comments are in. We're reviewing it. So I don't want to say too much, but the theory of it in the first place was that those banks are not subject to the living will process to the extent that the GSIBs are. And this was sort of meant to be a middle step to make them more resolvable without imposing all of the burdens that we impose on the 8 GSIBs to have very elaborate resolution plans. So that was the thinking. I think on the calibration of it and all that, we have voluminous comments. We're looking at them, and we'll make an assessment and move forward as appropriate.
Well, thank you. And I know our smaller regional kind of banks would be happy to hear that thoughtful deliberation, Mr. Chairman. Understandably, you've had to raise interest rates to fight the fires of inflation brought on by reckless Democrat spending. However, a major side effect of that is the impact the rising rates are having on the cost of servicing the out-of-control national debt. Senator Haggerty alluded to this a bit in his questioning minutes ago. Looking at CBO reports, interest payments on our debt will increase 32% this year and will now exceed spending for the entire Defense Department. I have significant concerns, many do here in Washington, many Americans do, that we eventually reach a point where fiscal policy and monetary policy converge, meaning that the Fed would ultimately have to worry about the impact rate setting would have on government debt or even potentially the risk of a default. Chairman Powell, I know fiscal policy is not in your purview, but could you ever foresee a situation where fiscal irresponsibility snowballs to a point that the Fed would have to factor this into its decision-making?
I think we're a
We're
long
already
way
there.
from that, and that's a real that's a terrible place to be. That's a place where some poorer emerging market countries have found themselves over the years. For the United States to get to that point, I think it's unlikely. But I do think that, and it's not our business. We should stay out of this fiscal business. But I'll say what other Fed chairs have said, which is we really need to get back to that discussion about fiscal sustainability, and both sides need to get together. The kinds of things that have to happen can only be done on a bipartisan basis. And so I really hope that we go back to a place where those discussions are happening again.
I've heard from a number of stakeholders about upcoming changes to liquidity regs, including a new ultra-short-term liquidity requirement. As with any policy decision, establishing the facts matters. It's important that financial regulators have a complete, thorough understanding of the financial environment before releasing a half-baked proposal, rule, or guidance. My question is, what do you believe is a sufficient time period that would allow your agency to accurately calibrate new sound and reasonable liquidity requirements?
That is a great question, and one we're struggling with, particularly with all the other things that are going on. We're looking at some, and this is in response to Silicon Valley Bank, we're looking at some liquidity innovations, and we're asking ourselves, what form should that take, and how long should it be out for comment, and that sort of thing. We're not ready to do that yet, but that's the question we're asking.
Follow-on question, then I'm finished, Mr. Chairman. Will you confirm that prior to the Federal Reserve issuing any new liquidity requirements, it will first conduct all necessary data collection that would allow for meaningful analysis of all potential policy options?
And please keep your answer short, Mr. Chairman.
Maybe. No,
That's very short. Thank you.
I can't, we can talk about this more, but I don't want to make a really specific commitment like that without talking to the people who are, carefully in touch with this, but that is the right thought.
Thanks, Chairman.
Thank you. Senator Fetterman from Pennsylvania is recognized. Well, he got here last.
Nope.
So
The fuck is this
although
guy
if
wearing, a
Senator
hoodie?
Warnock sits down in the next 5 seconds, he's next. So Senator Warnock, are you ready, or you want to go to War 5? You're all so generous with each other. It's... Senator Fetterman's recognized.
Okay.
All right. Senator Warnock is recognized.
He has literal brain damage. I don't know who any of
Thank you
these
very much,
fucking
Mr.
people
Chairman.
are.
Bank spending on buybacks is rising again. And their consumer small banking revenue has sharply increased. Interest rates are high, yet the interest being paid to depositors, ordinary working families, working people with bank accounts. Not a lot of money in Wall Street accounts, remains low. Chairman Powell, I'm concerned that when banks don't increase the interest rates on bank accounts, families are losing out on dollars that could be in their pockets. Again, they don't have the kinds of portfolios that some of the folks in this room would have. Is that good for the economy? And are you concerned that banks under your supervision are doing this?
Are not paying sufficient.
That's correct.
That's a question I haven't heard. Of course, they have the option of putting their money in money market funds, and banks compete with each other. But I'll be happy to look into that. I hadn't heard that concern.
Yeah, and I think it is worth taking a look at. Many lower income individuals and families, again, they don't have some of the sophisticated products yet. Money markets are available, but we saw high interest rates and that not being reflected in what depositors are able to benefit from. Could those individuals and families benefit from a high interest rate on their deposits?
Sure. And it's for a long time, we had a lot of mail from people at the Fed to the Fed saying, you should raise interest rates because we're not getting anything on our checking accounts. So we solved that problem.
I don't think we're asking for that, but given the reality, the question. Yeah. So let me pivot. The monetary policy report states that while demand for housing has fallen, a strong labor market has kept prices high. That matches what I've been seeing in Georgia. Too many folks can't afford a home. According to the monetary policy report, mortgage rates were averaging around 7% last month. That's tough for lower income home buyers. Increases of just a percentage point or two can be the difference between owning a home or not. Are you concerned about this interplay between lower demand yet stubbornly high prices and what it means for folks trying to buy a home. And what do you think is driving these high prices?
So the housing market is in a very challenging situation right now. You have this longer run housing shortage, but at the same time, you've got a bunch of things that have
What
to do
sort
with
of
the
sentiments
pandemic
do you
and
see
the
from this
inflation that
meeting
are
outcome?
responsible
Not a
for it. So
lot. I mean,
you have a shortage
JPAL's
of
not
homes available
changing
for
any
sale
narratives
because
right
many
now,
people
so it's
are living in
it's
homes
kind
with a
of
very low rate mortgage that they
not
can't
all
afford
that
to
important.
refinance, so they're not moving, which means the supply of regular existing homes that are for sale is historically low and very low transaction rate. That actually pushes up prices of other existing homes and also of new homes because there's just not enough supply. The builders are busy, but they're running into all kinds of supply issues still around zoning and workers and things like that. So it's quite challenging. And of course, rates are high. So people who are buying, a lot of the buyers are cash buyers or are able to actually pay without a mortgage because mortgages are expensive. I will say the first problem, the longer run problem of supply, is a longer run problem. The other problems associated with low rate mortgages and high rates and all that, those will abate as the economy normalizes and as rates normalize. But we'll still be left with a housing market nationally where there's a housing shortage.
There's no question we have a supply issue, and this issue of high prices, lack of supply, of course, disproportionately impacts some communities more than others. According to the Monetary Policy Report, the employment rate for the Black prime age labor force, that is persons between 25 and 54 years of age, reached a historical peak in 2023. The gap between Black and white prime age employment dropped to a nearly 50-year low at around 3%. We can appreciate progress, but a 3% gap is still significant. Would you agree that it is important to continue focusing on narrowing this gap? And if so, what tools does the Federal Reserve have to do this work?
It's very important, and the single best thing we can do is get prices under control, get inflation under control, so that we can have
I still
a
think
long
we see like a
expansion
double top
with,
here.
The record is clear that a
Like
long
one more,
expansion
like
really
one more
gives
push
significant
to
benefits
grab
people at the low end
rest
of the
of the
income
calls,
spectrum because the
like
labor
the
market
long
gets very
calls.
tight, inflation is low, and they benefit more than anybody. So that's where we were
Think around
before
this
the
level.
pandemic, and we'd like to get back to that place.
Thank you so very much. I think there's some other
Something
legislative
like
tools
that.
Congress could use, and I'm happy to continue to work with the chair in the ways that we've already done to improve that difference. Thank you.
For sure. Thank you, Senator Warnock. Senator Lummis from Wyoming is recognized.
Thank you, Mr. Chairman. Welcome. It's nice to see you, Mr.
Why the
Powell.
fuck does Wyoming have representation?
My first question is about CDBCs. There's
like
been
60
some chatter
people in that
lately
state.
on the social media that people are concerned about the Fed creating a CDBC without
Yellowstone, bro.
legislative authorization. You and I have discussed that before, and as you know, there are other means other than a CDBC that could use digital assets to create a secure and instant payment system other than a CDBC. So the question is this: do you still agree that the Federal Reserve cannot introduce a U.S. central bank digital currency without congressional authorization?
Yes, I do.
Thank you. That's really calms people's fears, the people who are concerned that we could end up with something like the digital yuan that is used as a means of surveillance. So I think that will calm some of those discussions down. Thank you.
The fucking government can look at all
My
your
next
transactions
question is
anyway.
about
Doesn't
your
make a
core
difference.
CPE. Now,
Is it just
as you know,
maintaining
there's
the
a
illusion of
disconnect
privacy?
between how you measure inflation and how the American people see inflation, because the American people are spending their money on gasoline and food and
But we
rent
want to
things
feel
that are
about
going
it.
up
Yeah,
a
it's just
lot.
about maintaining the illusion.
And
Cash?
they hear about
Think
these
about
improvements
this,
in the
right? Like you want to buy
economy,
something off Craigslist,
that they're
right?
not seeing in their
You're going to go on your
everyday lives.
computer.
So can
You're
you
going to look up
explain,
items. You're going to then use your
what
cell
measures
phone to
you
text
use
that person.
evaluate
You're going to use your
inflation,
car that's got a
and just
GPS
explain to the
tracker
American
and your cell
people
phone that has a
why you
GPS
don't
tracker to go visit that
factor
person.
in the things they spend money on every day, like food and gasoline.
Then if you
Actually,
meet them in
do.
a public
Our
place, you're going to be
statutory target
recorded
is
handing them
inflation.
money
It's
on
not core
CCTV.
inflation. So if you look at headline inflation over the last 12 months, that's it. That's our goal.
Yeah,
It's
if you pulled the
2.4%.
money out of your bank,
Core inflation is actually
the serial numbers are tracked.
8%. And the reason is that some energy and food prices have come down, and those don't count in core. So our
Your illusion of
overall
privacy
legal
is a
target
joke.
Is headline
I drove a
inflation.
1990 Plymouth
which is,
Acclaim.
it's our best effort to capture the cost of living.
What if we meet in Wyoming?
It's
Then no
not
one gives a
perfect.
shit.
You have to make all kinds of judgments that aren't easy. I mentioned that
People think they have
housing earlier. How do
privacy.
you measure housing inflation? Lots of issues, but that's what
What's
we
ironic is the
reason we
people
look at
that
core, though,
so fiercely
is
protect their
that,
privacy
headline inflation
have already listened
tends
to what
be more
Snowden
volatile, and
said,
it tends to be pushed
which was
around by
that you have no
commodity prices,
privacy.
which really don't relate to.
So it's the whole thing's a
overall state of the
fucking
economy.
joke,
Is it
right?
tight? Is it loose? So core tends to be a better predictor of overall inflation than overall inflation is. I know that's complicated, but ultimately, though, our target is headline inflation, which does include food and energy.
Mr. Chairman, I'd like to include a letter in the record.
They go on
that,
TikTok.
Senator Tillis and I and two Democrats on this committee have submitted with regard to Basel III.
So I think if we get one more push to the upside,
my question is this: what do you think is more likely?
and we see a little bit of
it will be harder for consumers
profit
to buy
taking
a
on the
house
out of the
and
money
small
calls, then
business
we
to
can
obtain a
probably
loan
drop.
under Basel III, or
I would say to
will
like
lending just
5140
migrate outside the
or
banking
5125.
system, which may be harder to assess because
It might be more violent like
I'm sorry, I didn't get
yesterday.
your question. I
Okay,
apologize.
so with regard to Basel III,
Yeah.
If there are more constraints on lending activity,
God, these people
what
are
is
so
more apt
fucking
to be
bought,
the
man.
consequence of that? That it's harder for consumers to buy a house or a small business to get a loan, or that lending just migrates outside of the traditional banking system?
So if there were anything that constricted credit in the banking system, they would probably be both things. Probably there'd be fewer loans made, but in
What if
addition,
no
there would be
push and
non-bank
calls
lenders that are more than happy to
capitulate?
make that loan.
I don't know. You can
I was-
DCA into put
I have
positions.
a chicken and the egg question here. Starting with TARP in 2008, there has been a very aggressive printing of U.S. dollars up until today, and it particularly went on hyperdrive during that 22-month period of COVID. So my question is, which comes first? Congress
Big and
spending
neutral's pretty
more,
far out of the
and
money.
so you respond by printing more money, or are they
I
separate
think it's
considerations?
the closest one is at
I
75.
I think it's hard to get my mind around that question. We don't print money to fund the deficit. That's not what happens. But when the government borrows, it issues, basically the government borrows to fund deficits is what happens.
Right. And so that's, so that would indicate to me that you do respond, because we, in spending, in deficit spending, are creating a demand to borrow, and you're responding by.
Well, we're not making loans, though. You know, we're not lending money to the government. We're not financing these deficits.
And so there's no chicken and the egg relationship?
There's not really, no. I'd have to think about this. I got to think about the way the plumbing. Why don't we continue this?
Yeah, I'd love to. And your thoughts earlier about fiscal sustainability and how we can work with you and bipartisan, maybe next year, to address these issues. You know, when you say things, you have to be careful, because what you say has ripple effects outside of this building. But it would sure be nice if we could sit down with you on a bipartisan basis and have those discussions in a frank way.
Thank you, Senator Lummis. Senator Fetterman of Pennsylvania is recognized. All right, Senator Van Hollen of Maryland's ready.
Let me start by thanking Senator Fetterman for his allowing me to question him. Mr. Chairman, good to see you. Real wages are up, right? That's good news.
Yes, over the last couple of years, wages have been going up more than inflation. Real wages broadly are up.
That means more families have more spending power in their budgets, right?
Yes.
Worker productivity is up, right?
Yes, it is.
Corporate profits are up, right?
I believe so.
And worker productivity is rising faster than corporate profits, right?
I don't know the answer to that. That may well be right.
The charts I show suggest that. So that would indicate that unless corporations decide to pocket as profits more of the gains they get from their workers' labor, that we should be able to continue to have increases in real wages. Is that right?
Yeah.
And so it's important, I think, that people recognize that these corporations are doing better than ever, and they are deciding now to essentially return the gains made through their workers' productivity, which is going up, more to shareholders. Obviously, shareholders are going to get a profit, but the question is whether or not workers share in that profit to the extent of their worker productivity. And as you know, we've seen a great gap over decades between rising worker productivity and real wages, and we're hoping to close that gap. Would you agree that it would be good for a more inclusive economy if worker wages tracked worker productivity increases?
I think if you include benefits, that's a significant part of that gap. I've looked into that, but not for some years. But I mean, generally speaking, people's compensation should be over time equal to increases in productivity.
I appreciate that. And I also want to, there's the trade-off on workers' wages, and there's also an issue with price gouging, right? So we have seen record profits. We've also seen very high prices these corporations are charging for things like groceries. Now, I listened to a little bit of exchange with the chairman earlier, and of course,
Or the
I
upside
think your answer
resistance
was
fee? It's at like 55,
people will charge
60.
what consumers will pay. But it should be known that these corporations are reaping much larger profits now than they were pre-COVID, for example, right?
I mean, some of them are. I'm not super focused on individual corporate profits, but yeah, corporate profits, I gather, have been high overall.
Right. I mean, they're high for a couple reasons. One is that they're charging consumers, for example, at the grocery stores, a lot of money. And the other would be if they're not sharing the benefits of labor productivity with their employees. So I think because we've heard a lot of claims by some of our Republican colleagues about the causes of price increases, and I think it's very important that American consumers recognize that corporations are choosing to charge them more at the grocery store or engaging in things like shrinkflation rather than in order to have more of their profits. Let me turn briefly to a letter that I sent to the Vice Chair of Supervision and some of the other federal regulators in January of this year regarding the Basel III capital requirements, and I support the overall effort on Basel. We did raise concerns with respect to a specific issue, which is the harmful and we think unnecessarily harmful impact it could have on clean energy tax credit investments. And all of the regulators testifying that day, including the Vice Chairman, said they recognized this was a significant issue and hope to address it. Would you agree with that?
Yes, I would.
Thank you. Thank you, Mr. Chairman. Thank you, Senator Fetterman.
Thanks, Senator Holland. Senator Fetterman of Pennsylvania is recognized.
Yes, I love that. All right.
So it's great to be here with you today. Now, I don't know, maybe some people in America were talking about a cookie that was $18. And I was alarmed, and I hope we investigate that there is a cookie that cost $18. And do you believe that an anecdote on Twitter about a cookie that cost $18, is that reflective of our economy and where we're at, or not?
I certainly hope not. I don't do much shopping these days, but that sounds like a pretty expensive cookie.
Yeah, and now, I believe that that the American economy now is the envy of the world after everything right now. Correct?
We
This
are,
guy not
we're
own a
performing very
fucking
well
suit?
compared to our peer group.
Yeah, pretty great. And is it fair to say that the stock markets
Is this
are
like
all
a
up at
shtick?
record highs, right?
Pretty close.
Yeah. And inflation has been pretty effectively addressed, right?
It's been coming down sharply since the middle of last year. Yes,
Yeah,
we've got a ways to go on that, but we've made a lot of progress.
And corporate profits are pretty
He
robust.
has brain
Is that
damage.
fair?
I believe it is.
50% of them
Okay.
have already had a
Well,
stroke.
if we can agree that, and I don't understand why more people seem to be talking about a cookie that cost $18, but that seems to be against the evidence as well. But given that, now, since things are pretty great, and we're in a really great, excuse me 1 second, place.
Is he
But
texting
now
someone right
I am
now?
concerned, and there's rumors going around that Basel they're going to change. And they're
Basil,
gonna
you
reduce the
dipshit.
capital, Right. and I guess I'm concerned about that because I don't know why we would want to. And also, I want the record to reflect on you're much smarter than I am.
I just texted
But
him.
I would be
Okay.
concerned that things are in a really great place right now. We can all agree on that. I would be concerned to change something like that because I wouldn't want to have something
It's
again like
Basel,
what happened with SVB.
Basil.
And I just wanted to get your take on that. Is
Sure. So U.S. banks are well capitalized, and generally speaking, they're quite well capitalized. And we're not talking about reducing current capital levels at all. Really, in the Basel III endgame, capital may well go up. And what we're talking about is whether the proposal that was put out by the bank regulatory agencies, including the Fed, and which has now been the subject of quite a lot of comment, whether, what changes will be appropriate to that. That's what we're talking about. We're not talking about reducing existing capital requirements.
Oh, okay. Well, that's, and then I also want to play off of a comment made by my colleague from Tennessee, and I actually agreed with him. And he's concerned about the deficit, about it's $1 trillion for every $100 days. So now, if the federal government had added $3.5 trillion to the deficit by extending the Trump tax cuts, would that increase or decrease inflation?
So I'm going to fall back on our long-time reluctance to comment on fiscal policy. We take your fiscal policy decisions, whatever they may be, we take them as they are, and we conduct monetary policy to achieve 2% inflation. But we don't score inflation. CBO does that. They'll make a judgment on that, but it's not something we do because we're an independent agency, and that requires us to stay the heck out of politics.
So I don't want to put you on the spot, but would those kind of tax cuts, would that help addressing inflation or inflame inflation?
I don't know what the effects would be on inflation. I do know, broadly speaking, we need to get to a place where revenues and spending are better aligned, and I think everybody knows that. And I think we used to talk about this a lot 10 years ago. We're not talking about it so much anymore. That's understandable. The pandemic was a special thing, but I do think it would be great to get back to that on a bipartisan basis.
Is NVIDIA now carrying the entire
about 30
market?
seconds
Pretty
left.
close.
I just want to go on the record. I think you've done a really great job. And I think our economy, and I do agree that it is the envy of the world as well. And I'm confused that more people are talking about cookies or McDonald's meals and those kinds of a thing. It's not reflective on the strength of this as well, too. And I just want to thank you for your service.
Thank you, sir.
Mr. Chairman.
Thank you, Senator Fetterman. That's the last question. And thanks for your generosity in yielding to colleagues who got here before, whom you got here before, if I said that right. Thank you, Chair Powell, for joining us today. And every 6 months, and sometimes more often, I look forward to working with you, continuing to work with you to strengthen our economy. Senators who wish to submit questions for the hearing record are due 1 week from today, March 14th. To Chair Powell, please submit responses to those questions for the record no more than 45 days from the day you receive them. Thank you again for your testimony.
Thank you, Mr. Chairman.
Was that the end of it? All right. No, we didn't get the full bingo card, so. All right. The testimony is over, and now the double top can break down as per the script. I think we still have a tiny bit more upside possible. Yeah. Do we have any other data coming out today? Fed quarterly financial accounts. Those just came out. U.S. consumer credit at 3 o'clock. Ooh, real estate values fell by 0.6 trillion. Yeah, we might be getting close to a top here. I don't know. There's still a little bit of out of the money positioning that we could. I feel like we could easily pump up and grab, but we're struggling with it a bit. All right. When NVIDIA down, it doesn't even consolidate anymore. Yeah. Dixie's still getting boofed. Yeah, but yields are up. Well, at the top end of the curve, yields are climbing pretty quickly. Which is what matters. Yen dollar is starting to turn around a little bit. Settings. Ooh. Interesting. All right. I need a little bit higher high for this to fill. What about beyond? Yeah, it's getting down there. Close to 750. I still haven't bought yet, but it's also still on reg show. Let's see how we're looking. We're getting pretty close to like peak illiquidity here. Well, or peak, maybe that's just peak liquidity. 4 hour. Yeah, still a little bit of ammo. I could see 750. Getting back eight's a big deal. That's going to drive a lot of momentum, but I don't know if it'll drive enough. Facebook's so hot right now. I mean, is it? Listen to when that negative $10 candle is ready. We might be getting kind of close. I would say we probably have some time still. Maybe like half an hour or so before any dramatic shifts in momentum. We are kind of double topping on futures around the 5160 mark. Getting a little bit above the prior high. Not the intraday one, but the high from the 4th. Are you looking at April, or did I hear you say June options for beyond? I've looked at both. I'm trying to be very careful about which ones I choose. I don't necessarily dislike June, but I think June I might like synth longs a little better. Puts are getting very expensive. I don't hate the June calls. My biggest concern with this is that it drags through a period where I do not expect indexes to perform well. Right? Like I don't think from like March 15 through FOMC we're going to have a lot of overperformance. And then FOMC could be very, very bearish, especially if CPI, PPI are hot again. So that's my biggest concern with taking a position with so much theta. Oh, the fuck did I just do? Huh. That was weird. Anyway, yeah, I don't know. Still thinking. It's annoying though because as forced covering goes on, it may just start moving up, and then I'll miss the entry opportunity. And it may move up like regardless of, you know, index pressure. Generally speaking, it has pretty positive beta. So a big sell-off in IWM should provide liquidity for netting off FTDs. I want to get short exposure in an account of mine that is unable to trade options / SQQQ. Any suggestions? I think there's like a short S&P. KRS? No, that's banking. SH. I think this is just like non-leveraged short short SPX. Although its performance kind of sucks. Like, what was that? October lows, it was at 15, which is only like 25% above where it is now. Ah. Oh, give me my fill. Let's do it. Vol is still pretty high, actually. How am I not getting a fill on this? The fucking bid hit $2 already. Twice. Don't you fuck me. Keep going up. There you go. Are we reaching the high for the week here? No, I think we can still go higher tomorrow. Depending on non-farm payrolls. Any reason for meta pump? I don't think there's been any news or anything. I mean, there's a shitload of calls on the meta options chain. Oop. Which one did I get filled on? Okay. Nice. Will my 5200 call print today? I don't think so. So I sold, that was the 65 or 65 and sold the 55. Boop. You still holding BTU? Yeah. Yeah. It's been going up the last few days. I don't have any CCs out on it. I had some 25s, but I closed them when we bounced. We have 415, 514 puts, XSP about 30 minutes ago. I'm starting to think I went 2 out of the money. So there's a call wall at 5140, which could act as support on a downside move. But if there's enough momentum, I don't think it would matter. But you'd still make a profit, just less, right, if we got hung up at support there. What do you think about CYBN or other biopharma companies are using DMT, ketamine, shrooms for depression, anxiety treatments? I think it's interesting, but legislatively, there's going to be a lot of issues, right? Look at the track to get like marijuana legalized. Psychedelics are going to be even harder. If there a $10 red candle, are you looking to show up about right now? No. Soon. Not right away. I would still say like 20, 30 minutes. Why do I straddle at 345? You can straddle whenever you want. With how the market behaves in the post-COVID era, i.e. NVIDIA, Mag 7, how do traditional finance people justify products that are over-diversified? I mean, because 2023 or 2022, right? If you weren't well diversified in 2022, you had like a 50% drawdown. So I mean, concentration risk is still a risk, right? You know, you guys, a lot of people tend to focus way too short term for institutional holdings, but if you look out over like the longer period, and if you were to adjust, like this isn't adjusted for inflation, right? But you know, this is over 2 years, we've got 7% gains, which is 3% a year, right? So the S&P, like over the last 2 years, is still seriously underperforming. Over the last 4, it's doing very well, but you know, largely because of the market crash. And that's still, you know, only what? $51% over 5 years, or over 4 years. That's I think it's roughly 4 years. It might be like a month off. So you got like 12% a year, which is okay, right? Like it's not ridiculous. And then, you know, if we go back to 2010, which is the time period most people are concerned with, right? $386. Now you got about 38.6%, which is, you know, perfectly. So that, I mean, that alone justifies a diverse portfolio of holdings, right? Like if you owned Nvidia from 2010 till now, April 2010. This is split adjusted, but we've got about 21,000% return. But for 6 years post 2010, you were underwater, right? And during that 6 years, a lot of other things overperformed. So, and some of, you know, a lot of that value was retained. Yeah, there's a lot of ifs. Yeah, there's no way anybody would have known Nvidia would have MOASSed, right? Like, and a lot of Nvidia's price improvement is driven by like mechanical factors at this point. Is there any way to turn that off? Build a custom chart library? So wheeling SPY is the best play? Got it? Can be. You're getting more theta than 419 on your Beyond call. I haven't bought anything on Beyond yet. Let me be very clear. I'm still waiting. But I'm looking at April, June. If I do April, it'll be closer to the money, and then June would be probably further out of the money. So like above $10, I'd probably go with June. Below $10, April. By wheel, you mean aggressively short into uptrends? I'm already an expert. The next 21,000% is top. 2040 is the era of big plastics. Jesus Christ. Anyway. Do they have more room to short on Beyond? They have liquidity still. I doubt it's in a similar covering reg show situation to Beyond. It's just on reg show. That doesn't mean it's in the same situation. Ooh. Still no news on BNED's press conference. Volatility starting to pick up a little bit. 50 will be moderately strong support, I think. Support from the MM is going to be around like 45. I think if we lose 45, then there's still a call wall at 40. It's kind of a decent amount of, so unless we move down really hard, there's a decent amount of resistance between like 50 and 40 that we would need to kind of grind through. If we lose 40, we could drop to 25, I think. Maybe further. It looks like Gherkin got his SPX bear spreads at the top. I think I timed him pretty well. Yeah. Probably one more bounce in the tank. That's what I'm thinking. On like a test of 60. But we might not get it. That, like, volume is a lot lower. Tops aren't real, though. Gray, Evans. What happened? Just tuning in, big guy. We hit the top for today on SPX. You think chops to downs rest of the day? I still think we could test one more time higher, but if the out of the money call volume doesn't come in to back the move, then yeah, I think we just kind of chop down. It's definitely trying to form an ascending triangle here. No. I don't think so. Well, we'll see if we get a lower low. Do you write more than you buy, sell? Yeah, I think significantly more. I assume you just mean sell. Do I sell more than I buy? Yes. This looks almost identical to yesterday's price action. Well, it's a really similar setup, right? Oh, I won't be around tomorrow morning, by the way. I probably won't be back until like noon or 1. I'll throw this stream up before I head out, but I have something I have to do in the morning. No. No, I just have like bureaucratic shit I have to do. No, not jury duty. I think WeBull, I don't know. WeBull's pretty cheap. I think they're pretty equivalent. I'm not testifying to the Senate. It's not the job offer. I have to go like file some paperwork with the city. Their office closes at like 4. So if they're always closed when I get out of work, so I gotta go during the day at some point. Welcome back to Billionaire Heavens. Here's a song. Are you visiting your family number 2 and kids in Brooklyn now? Do you have to specifically reject the offer to buy out your lease? In order to renew, I have to reject the offer. But it's not time for that yet. Now, Mr. Pickle, will you testify in front of this committee that shrinkflation is becoming a problem for the average Americans? And if so, will you buy enough puts to cause a correction? No. My favorite part of FOMC and Senate is the first song you play and watch people go deaf live. That part's pretty fun. It's not a shrimping permit. I want to hear more about this $18 cookie. I don't even know where the fuck you get an $18 cookie. Like, there's some, like, I know where to get some, like, $9 cookies, $12 cookies. I don't know where to get an $18 cookie. And I live in what's arguably the most expensive city in the US. Like, what is it? Crumble or like Levain? Come close, but they're not that much money. It's a big fucking cookie. Put THC in it. Oh yeah, that would work. More expensive than the state of Columbus. Cookie cakes are about that much. Okay. Isn't that just an even larger cookie? Or does it have cake-like properties? Just would ask, how are you? Allergies, sleep stuff, doing alright? May you be faring well, dude. Thanks, who ate my hat. Yeah, I'm hanging in there. I don't have another round of allergy appointments for like the immunotherapy shit till I think April. So nothing really going on right now. I still don't sleep, but that's normal for me. No, just a giant horrible cookie. Oh, okay. So with first last month's rent security deposit, only about 8.5K wired by the end of the week. Also upgrading the yurt with plywood floors. I don't know what you're talking about. I'm not living in a yurt in your backyard, Dirk. You try to create some sort of like permanent Verbo situation for glamping. You having renting issues at your place? No. No. My landlord is trying to buy me out of my lease because his dipshit management company leased me the apartment without the appropriate addendums to I guess remove their liability for it being a or a rent stabilized unit because it was built before 1974. And so there's supposed to be an agreement that you sign that like you're not renting it as a rent stabilized unit. And the management company didn't make me sign that agreement. So now I have all of the same rights that a rent stabilized tenant would have, which is awesome because I rented my apartment like at the bottom of the market during COVID. So they can barely raise my rent and they can never kick me out. I would sublet it. I mean, if I didn't live in it, I probably would. It's the market's getting pretty close to the point where I could sublet it and then rent an equally nice apartment and still make roughly the same, basically pay no rent. Because I think there's like one other rental unit in the building, and it's like on the ground floor, and it rented for I think it was $72.50 a month. So if I could get like 8, then I could rent another shitty apartment, live there for free. Square footage in New York City is expensive as fuck. I miss the random screams we used to hear from your old apartment. I'm not sure if a nearby child or parrot or what it was. There was a lot of screaming in and around my old apartment. There was this fucking bitch who lived down the hall who used to like sing opera all night, which is funny because Thai Kid, who's like in the Discord, also has a neighbor. He lives in New York City and has a neighbor who sings opera all night. The old apartment was full of mold because they didn't repair the roof and there was that fucking storm and all the water got in the building. You said support mainly at 40-45. Yeah, if we, well, 50, 40, and 45. 50 and 45. So we need to lose 50 first. 50 is really important. And then 45 is where the call wall is. Did you say rent was $72.50? Well, no. In the downstairs unit. Not I'm not on the ground floor, and I think that apartment's smaller than mine. My partner used to live next to someone who sang Broadway show tunes all night. I don't know why people do that. I used to think you were lying about single and had a family because of the screams. Conspiracy rabbit hole I went down turned out false. Or did it? I don't fucking know, man. Did it? Working on an audition? Maybe. Gross green candles. Yeah, but lower green candles, right? Why am I still looking at this stupid fucking index? This is the only thing that matters, right? Is NVIDIA going down? Where is it bouncing? Fuck, man. Cat's gotta be topping out here. Ooh, Visa's down today. Interesting. Small caps are flat. I don't have a kid or a bird. Tesla puts yet? Hmm. I don't know. Bears might continue to capitulate on the bounce. If they do, I would say Tesla could at least get back up to like the 190 level. Especially if indexes keep running over the next few days. We still don't have really good downside momentum yet. Yeah. It still looks like there's a little bit more time. Maybe we get that high test that I wanted. Fucking huge downside gaps. Jesus. Weird peak on forward returns. Oh, fucking reset trading view and fucked up all my charts again. Short vol's not very aggressive today. Getting a broadening wedge on the drop. I guess that already broke up. Yeah. Maybe it's just a downtrend. I would think, based on momentum, that we would get something like that before failing. But I guess we could fail here too. Just because the breakout was so shitty. Like, futures doesn't look particularly strong right here. I think if futures loses 51.50, we probably find a decent amount of sellers. Do wash sale rules apply on options trading? Yeah. If it's the same contract. But if it's a different contract, then no. Also, not as regularly reported by brokerages, but that's like a whole nother thing. power hour last 15-minute pump? No idea. We're very far away from that. I think he's speaking more to like day trading options. Per share short Dow 30 is dog. That's basically inverse cat. I'm not buying this ETF. Yeah, I mean, well, cat's a chunk of the Dow. It's not the biggest one. Microsoft is. I think Microsoft's the biggest company in Dow right now. Amazon is gonna be second. Also, it doesn't matter unless it's an option that expires in the next calendar year. I don't think wash sales ever matter. Unless you have a loss. If you have a loss, you buy the same one again. The wash sale will add the loss to the second contract, right? People asking are talking like they can't deduct the loss. Or you can't deduct the first loss if you buy the same contract, but then the loss you suffer on the second contract you can deduct. Real simple solution to wash sales is just don't be net negative on the year. Yeah, only net profits and losses matter. Isn't it still UNH? Microsoft and Amazon are way bigger than fucking UNH. So is Apple. Apple, Amazon, Microsoft. UNH is decent. It's not the biggest. Cat's over here. Yeah, we'll just go this way. Where's Cat? This is market cap weighted. That's price weighted. It'd still be Microsoft, right? What's UNH trading at? Nope, UNH is trading a little higher than Microsoft. Yeah. I'm gonna go get something ready for lunch. What's our next support for Fubo? Are we really looking like back to $1? The next support would be 175, right? Which we lost. And then yeah, $1.50 would be next. Yeah, volatility is like the whole like volatility regime is shifting. It's shifting higher. So, I mean, I don't think we're going to see a lot of the lows that we've been seeing recently. We've also been seeing short vol pull back. Where's Top? Top is trading at $1.31. And it is getting massively illiquid. You know what? I might start to go long Top here. Maybe just like a little. Just a little taste. Which is the fucking April $19.50. Mm, 43 days. Guess I just go $2. I don't give a shit. July $2.25. It's too much data. Mm. All right, 1 second. Be right back. Any signs of bearish momentum yet? A little bit. Like I said, I still think we get like another top somewhere in here. I just kind of like projected this, so it's not super accurate, but looks like it found a trend right around there. I'm single-handedly building a call ramp on Beyond. I'm ready to get hurt. Nice. I don't want to buy those for 18. Gross. Still can't sell those for more. All right. All right, we're getting a little bit closer. Like 15, 20 minutes till we get some reversal in momentum. I broke the bezel of my watch. It will cost me 250 euro to repair. FFs. That sucks. Can't you just buy the part? I mean, like I don't think a bezel's very hard to put in. As long as, well, did you break the crystal? Also? How do you know the time frames for when things will reverse? Magic. Centaur magic. Taught to me by the old gods. It's not magic. Don't believe him. Pay for data. Okay. What data do you pay for that tells you when something's going to break down in advance? Feel free to fill me in. I'd love to know. Pigeon whale. Washington beef. How dare you speak to me as a poor with all of those gift cards? The metal bezel, it's a little bit bent. There's no replacement bezel because the watch is made in Germany. I need to change the whole case and ship it to Germany. Fuck, that sucks. It's called watching the stream. The cost is on my employer's time. There are over 3,000 rounded bottom breakouts happening on any given day in the stock market. NYCB $3.50 puts seems kind of cheap. What do you think? I mean, risky with them getting funding, right? Senor Pepino, I need some advice. How can I tell if my pregnant wife needs a break from sex parties? I want to make sure her puffer kite stays nice and neat for our young centaur. Also, can you explain how my wife got pregnant if my mayonnaise tubes got clipped? I'm going to go with the sex parties. Don't worry. They're, the puffer kite is very, very elastic. It snaps right back. Aren't you cheating if you know the time when it reverses? Huh. Maybe. Kendra is for the people. Weren't we supposed to hear something on top today or soon? I hope so, because I just bought a bunch of calls on it. Soon. There's no actual disclosed date, just sometime in March. Yeah, JPow's done testifying. Don't you have any, like, watchmakers around you or something? I feel like somebody's got to be able to get the part. Why are European countries so separate? That's the weirdest part about Europe, by far. My neighbor's a watcher. Always has been. I thought that's why you put up the fence. Send over the contract. I can start whenever. I don't need a trading apprentice. I mean, they have the euro now. Care to elaborate on the European comment? I mean, like, I hate people in New Jersey, right? But I'm weird. And like Europe, it's just, you have such a cultural difference over such a small area of land, you know? It'd be like if people in Georgia spoke a different language than people in Florida. They do? Okay, well, let's not talk about that. Places that are colonies are just different. In Atlanta, we talk like we want. You heard splat splat. Yeah. It comes from the days when getting to the next village 10 miles away to fuck your cousin took 3 days by mule. Sometimes you're just on a thirst quest. Like a pilgrimage. Just give a shout out to my coworkers, Thumb and Sean. They don't like pickles, but wouldn't mind getting a taste of the Gherk. Kendra. You're a Cornichon now? Shame. Because Europe doesn't only exist on paper. All countries do have different historical roots. Not long ago, countries on the European continent did have war. Yeah, so. We went to war with the other half of our country not that long ago. We're about to do it again. Germany's just playing the long game in terms of owning all of Europe. The problem with Germany is they always want to own more than Europe. They've been pretty good at just getting all of Europe a couple of times now. Don't make me mad. I might pigeonwell myself. Oh no. We have a Bloomberg terminal in the Cornichon Country Club? No. Sure, but historical America is a young country compared to European countries. True, yeah. No, it's all way more ingrained. It's like Asia, right? Like everybody hates the people in the province next to them. Not me. I'm poor. Oh, okay. Big red candle, come on. Now, don't be greedy. You know, today's just kind of been pretty stable, really. 10 minutes. That's gonna be right around 1:30, isn't it? The difference between the US and the UK is that the British think 100 miles is a long way, and the Americans think 100 years is a long time. It doesn't matter. Both of them are too fat to ever traverse those distances. Javi A, welcome to Cornichon, man. Germany's just cautious. They don't want to be responsible for any more future conflicts. Why? Because they haven't rearmed properly? It looks like it's going to break up to tap that 5160. That's what I've been waiting on all day. It hasn't done it yet. Lower high here is really not bullish. Possible to just trade here for 2 hours? I think we'll get a big momentum shift, and then wherever that lands, we could probably bounce back. So I think it's definitely possible that we could just close at like 50, 5150, 5155, but I don't think we'll stay here the whole time. Beyond to maybe 650? I don't know. Found a lot of support here at like 780. If you play the original Pigeon Whale song and you help me turn $5 into 69 by the end of the day, I'll come back as a Pigeon Whale. I mean, I'll only play the original Pigeon Whale song if you sign up as Pigeon Whale. But let me make sure I still have it. Hmm. I wonder if I do. I must, right? Where the fuck is that shit? Hmm. Maybe I don't. Huh. I think I'm abandoning Fubo and going into Top instead. So you're gonna ditch a company that's had 4 quarters of consecutively positive earnings to buy into a company that hasn't reported their earnings in 6 months? Mm. Is that the new intraday high? All right, 1 second. I'm gonna go check out my food. It's about to free fall. We'll see. Still a little bit supportive. Let's see. Delta's pretty flat. Few puts being bought at like 50. Not too many at 45. Thoughts on XCEL Energy? It's probably not the right. XCL? Headquartered in Minneapolis. 64% payout ratio. Earnings haven't been great. I mean, utilities have been down, but they haven't been doing very well. Cash flows have been declining pretty hard. And they're still accruing debt, which is not great. I'd have to look into them a bit deeper, but I'm not a big fan of where they stand right now. Worth getting an upside hedge. If we get more call buying. We're not really getting a lot of call buying here. We just kind of tapped like the upper end of the calls that were bought earlier. I don't see anything really coming in out of the money. There's a few buyers at the 70, but not many. It seems like puts are still picking up at 60, 55, 50. Gamma's turning a little negative. But, yep, Jixie's still dropping really hard. Ooh, ANF finally dumped. The 800% run reaches its conclusion. What's killing Dixie? Right now, the yen. The euro and the pound a bit, too. Powell spoke earlier. Dump canceled? No, momentum's still turning down, but there's some like at the money buying that's propping it up for now. Alright, that should be roughly the top. Let's see what happens with the... Ooh. It's weird to me that ES is leading NQPA. Is it really? There are no signs of de-risking until something has been de-risked. As long as we don't hit 70, then I don't think the upside's too big of a risk. Still not a lot of call buying out of the money. Increasingly lower volume. No dump today? That's not necessarily true. Usually blow off tops like this don't end well. I'm just trying to figure out where the volume's coming in. I think it's just futures. Well, At this point, a reversal taking us to 50 could very well take us below 50, right? Because calls at 50 are going to take profit if this drops. We went up fucking $3 above the PT, and you're worried about us going straight to 52.50? So I saw my 5140p I bought 2 days ago. I should have sold it when it was $50 in the money. Was 5140 off the table though? The call wall at 5140 is already sold off. VIX is doing a thing. Yeah. Are there a lot of sold calls here? Not too many. What there is a big fucking chunk of calls at 70. What I think they're trying to push for to get support, or they're just trying to pick them up and sell them off. It's hard to say though. Most of the buying's still on the future side. We're gonna call selling. There's a little bit of call buying. They reversed. They haven't quite reversed the momentum shift yet, but they did flatten it out a bit. What's a good entry on Beyond? 680? It's hard to say how low they can short it. They still haven't gotten it below like the 750 calls and the 7 calls, but below the 8 was really all they needed. There's not too many sold calls below that. So we very well may see them start to cover from this point. Seems to be finding a lot of support at 780. That's some of the volume that we're seeing. How big was that order? It's like 312,000. Is there anything on SPY? 250. Those aren't huge. Hmm. Vol's still picking up. $50 put volume's growing pretty strongly. $60, $50. There's some 70 buying, 60 selling off a bit, 50 still support. On YMH podcast, they showed a girl that gave a PSA about using your yeast infection to make cinnamon rolls as a sweet gesture to her husband for Valentine's Day. What is the sweetest thing you've done for a lady pickle? Usually just take them to Cinnabon. I don't ask how they're made, man. I think there have been both social media instances of beer, bread, and something else using that particular variety of Canada. We don't need to go into it though. We're talking about Jesus? No, but we could probably use some. How are we getting fucking support here? Are they buying calls for tomorrow? I could look. Well, tomorrow's Friday, so probably. I don't think we go down substantially tomorrow. As a matter of fact, probably more upside tomorrow, but let's see. We have the 3/8 expiration. I'm not particularly worried. It's a lot of spot up, vol up. Not too many. I mean, there's calls tomorrow at 70 and 75. But 65 is kind of resistance there. And then, yeah, tomorrow's not structured too differently from today. It doesn't look like they're adding a lot of volume there right now. Let's see if vol keeps moving up. I went bearish after yesterday. I am the reason for zero pullback. No, the reason for zero pullback is like right at the point where momentum was going to shift. Somebody bought a shitload of futures, which can be seen very clearly on the chart. Right there. The problem with this is I mean, it doesn't really add a lot of support. We get a little bit of support at the 60 level. And we still have support down at 50, which is like down here. So mean reversion still very likely, right? Like they can flatten out the turn in momentum. They could try to pump into it, but I mean, eventually it's going to still turn, right? Yeah, I see the SPY volume. See, that's a big chunk. QQQ's got the same. No, not so much. Where are sold calls for NVIDIA? 900, 925. There's some at 910, I think, but not very many. I mean, it is affecting consumer prices. So no, I don't think there's a way to do it without affecting consumer pricing. What's the current situation with Beyond and what's going on with Top? Beyond seems to have lost or fallen below the $8 sold calls, which is what we wanted. I'm waiting to see if it's definitely got support at 780 here or not. But so far, throughout today, it seems to have found a decent amount of support at 780. I bought calls on Top because at some point this month, They're supposed to announce their earnings, and TUP was kind of cheap today. It's also getting really illiquid, so even if they don't announce their earnings right away, they may have to just do some covering on it no matter what. I mean, if it fails 60, then yes, it is in fact a double top. Hold on, I think I got a delivery. 1 second. Nope. I feel like we're getting a lot of de-risking here, right? Getting big pumps in vol, but we're not squeezing anything out. Price is staying relatively stagnant, but vol keeps going up. And if vol keeps pushing up, it's gonna push the MM to sell. About 30 F contracts and limit above market because I didn't realize I was on the wrong tab. You trying to grab the other side so I can get out without losing my hat? Tell me I'm not the only one when I see conjoined Hensel twins that only thinks about how fun a double top would be. You know, Kendra, I remember when you were normal. You were just a guy building a fence in the South. He should be in Congress. He'd fit right in. No, but he clearly should work at the FDIC. I really want to find more internal transcripts from the FDIC. I want to see how hard they go. Because it seems like they party pretty hard. Take a serious look at VLCM. It's above it. Does it have options? How do you know short interest is going down? You can't track short interest in real time. BNED, $1 end of day? Maybe. If NVIDIA keeps pumping, can SPX even drop? Probably not. Is I the one who doesn't have stops and then gets distracted by work? I will never financially recover from this. Oh boy. You're just looking at short volume, which doesn't tell you anything. My data isn't short volume, and I'm also not tracking that stock. Nor am I going to waste the resources on attempting to track it. You're gonna average down your bear calls? Maybe the 60-65s. I don't really want to, though. I'm pretty happy with where they're at. You're gonna average down your bear calls. Hello, it is I, the one who sold 50% of the position for profits, so I might be able to financially recover from this. Which crystal is best for portfolio healing? Turquoise. I'm gonna buy some put calls for tomorrow's earnings on BNED to protect my position. I don't think they have earnings tomorrow. Well, tonight. What if you divide the short volume by the square root of the outstanding shares and then add in 1/10 of the DRS shares? I've heard the number is even MOASS. Should I sell it all and all my crypto's way up? Should I sell it all and buy a horse? Or would a mule be better? I don't know. It depends what you're using it for. If you're making more of those videos again, just remember what happened to your friend. I read earnings are tonight, and then they moved third quarter earnings. Maybe I'm wrong or I'm on old information. Oh, are they? I don't know. Now I'm confused. Hold on. Oh, okay. Yeah. They're moving their third quarter earnings. Interesting. Ew, they're in New Jersey? Ah. I don't think I have Enox either. I don't generally track a lot of penny stocks unless they're of interest to me, but I can check. Nope. I'm selling everything? That's disgusting. Yeah. Stop trying to make yourself bearish on our holy and benevolent shit stock that is BNAD. I mean, they're in New Jersey, man. Not even the nice part of Jersey, which isn't real, but... They're in Basking Ridge. Ugh. This is what that looks like, in case you're wondering. See all the people in the streets? I'd rather spend a full workday in a Baskin Robbins than go to Basking Ridge, New Jersey. That's not Vermont. It's Basking Ridge, New Jersey. Why would it be Vermont? Because of the trees? This is what the locals do for fun. That's right. Revolutionary War history tours. Worse yet, they're volunteers. Is that the tree they hung witches from? Probably at some point. It's their oak tree. That's what they're famous for. Is there a kava nearby? You'd have to ask Gaff. It's probably not as good as the one in the city. Can we get another one of those big, beautiful Persian rugs like yesterday? That'd be cool. Ooh, what's Tup doing? Hello, Tup calls. Huh. Right in the nick of time. Look at that. Is this our fault? Did the pickle jar just trigger a squeeze? God, I gotta move to Mexico. Son of a bitch. I don't think Tup got any news. No. The last news on Tup was on the 16th when they did the forbearance agreement. Oh shit. Momentum's starting to break down again. Time to buy more calls? Or is this the end? My normal New Jersey kava is only 20 minutes from Basking Ridge. However, Pi is correct. It's not as good as a Manhattan kava. What line? Oh, the bottom of the downtrend? I'm pretty sure if I extend that, we've already broken through. Yeah. Let's go implied volatility. Fucking bulls, man. They did all of this just to avoid a reversal in momentum, which probably would have gained less momentum had they not done this. QQQ is not flat, but it's flatter. Bulls are known for running off cliffs of their own creation. The NYCB puts I got for 10 cents, or 6 cents are now 10 cents away from being in the money. There's no way this is really about to happen, is it? That'd be wild. I don't know. What's going on with them? Was there new news? Mester says, not very concerned rate cuts will fuel inflation. We will probably move rates down in a gradual way. I don't see a big boost to activity when the Fed starts cutting rates. It could be that we have a higher neutral funds rate. It's kind of all over the place. Fed wants to bring rates into a neutral stance over time. Seems like inflation's doing that job for you. Fed's goal is to ensure inflation ebbs while job market stays healthy. Mester's pretty dovish. Mester and JPOW painting the bottom on the dot plot. JPOW said reassuring things about rate cuts. No, he didn't. He just didn't say anything about rate cuts. I tried looking up kava. Is it like Panera? It's like Mediterranean Chipotle. How high does VIX have to go for MMs to sell? I mean, I think MMs are already selling a bit. There's just support at 60 and 50. Actually, 60, 55, and 50 all have a decent amount of support. It's losing a lot of gains. Anyone want to meet up and teach me how to trade in the dark? Why? Okay. How can I get Elizabeth Warren to be chairwoman of the Fed? I like the way she does not like banks. Maybe she's just got too many puts. She was following Tom Lee's advice and bought in for a 7% downside. Now her theta's burning up. She just doesn't like JPOW. I think she just doesn't like the Fed. She's not wrong. JPOW has flipped his narrative on, you know, getting banks under more restrictive depository requirements or reserve requirements. When all the banks were failing, he was being really hardline about it, and now he's being a little bitch. This whole time I thought you were talking about Hawaiian kava. God. Just assume that anything I'm talking about probably has nothing to do with Hawaii. Any idea how high TSM can go? No. I want to talk about Hawaii. I don't. Hawaii is just like the shitty Bahamas. Why do people like Hawaii so much? The Pacific is awful. And it's fucking cold. It's a shit ocean. Volcanoes? Go to Iceland. Best food in Hawaii is Taco Bell. Well, that's not true. The Bahamas isn't good either. True. Mediterranean? Yes, it is. It is true. Dork, that's just because you think Taco Bell's the best food everywhere. Do you think someone got a sneak peek of the top report and that's what the spike was? I don't know. But I mean, there's no disclosed date for the top report, right? Jesus fucking Christ, when dump? Well, we started dumping a little. Can confirm the best food in Hawaii is Taco Bell. Ugh. Dude. The Rock isn't from Hawaii, man. Wasn't he born in California? I'm gonna look this up. His mother was Samoan. His dad was Black Nova Scotian. So he was born in California. Then lived in Charlotte, North Carolina, Hamden, Connecticut. And then in high school he moved to Honolulu. And then Tennessee. And then Pennsylvania. It's all over the place there. And then he went to the University of Miami. Or was offered a scholarship there. I think The Rock was born in Alcatraz, hence the name. Why are bulls like this? Why not? I mean, a lot of this, like, the upside move here was just them pushing to grab that, like, out of the money positioning, right? And then they started to sell it off once it got in the money. When your dad works for the WWE, you travel a lot. Oh yeah, that's right. His dad was like a pro wrestler, right? I mean, momentum's shifting, still shifting a little bit bearish, so I think we can get a continuation. There is a lot of support at like 55.50, but the call wall below 50 broke down. So no longer a lot of support below 50. That took profits on the upside move. But 50 is still a pretty strong support. My pickle is very limp today. Should probably throw it out. $14.50 isn't a hard top for the VIX. My pickle is limp every day. Am I dead? Really need to get back on Tinder, man. That's... Is pumping to avoid momentum flipping healthy market behavior? I don't think it's unhealthy. Check NVIDIA. It looks weakening and is bellwether for the rest of the NVIDIA 500. I somewhat agree with that. Hims? Those are the boner pills, right? Come up. We can pull some ladies' night at the Roxbury style. If you want to. I could. You don't even have to come all the way up here. Just hire you an escort in Florida. Any out of the money calls building up? No. But there's calls at 60. We mostly haven't lost 60 as a support yet. But like Delta's pretty flat. No one's really buying anything. Nothing's really selling off either. Futures is getting a little support at 5160. Let me see how tomorrow's looking. Why do the put side of straddles never get love? Well, they did yesterday. And generally on days like this where you get like a big directional move, it's best to just close the put side. Yeah, not a lot of change for tomorrow's OI. Still support at 5150 though. Or I'm sorry, 5150. Yeah, it's kind of flat. No, there's a big wall of calls at 50 too. 60 and 50. I think we're losing 60 slowly. Why is TUP being defended so accurately to the upside? I don't fucking know. It's like... There's like 15, like a 15,000 share sell wall there. On the ask at 141. We still dropped to 35. I feel like 50 is going to be a pretty strong support. But if we lose it, then yes. We're very far from losing it right now. I doubt it, BMG. 1.2 pennies until Gherk's BNED $1 cover calls get called away. I don't have any $1 cover calls. Why would you buy long-term treasuries? Well, you can buy the world's safest investment, NVIDIA. I'm not watching the stream on Tiny TV 2. Is that thing really the size of a nickel? Quarter? Oh. So I poured the last $30 on weeklies. If these don't print, I'm done with the market. I swear it to the Dans. I don't believe you. If we can't get below 60, how are we going to get below 50? Well, we are below 60. Any ideas about where the MM would like to close? 51, 52. Hmm. That's not enough downs. Shame. I mean, just because that's where the ideal... I mean, that's just where all the options interest is, right? It doesn't mean we can't fall below it. The fucking bump in top IV was nuts. There's got to be some kind of news that someone knows about. The Louisiana senator guy is crazy, but I like it. Okay. I don't see an RC tweet. He tweeted something penis. Gherk, tweet something so I can get excited about a tweet on stream. I don't want to go on Twitter. What did I front run? I didn't front run anything. I bought top calls like back here. The pores of top. What's your target for a drop here? 51.50? Yeah, that's kind of what I'm thinking. If we get a drop. I'm waiting for BNED to save my port. You could be waiting forever. I live in the EU and we use IBKR. Is there a way to decrease the my commission expenditure? It's brutal. Right now it's $1.20 per SPX contract. Not really. I think like does the IBKR Pro give you better commissions? Yeah, it does. IBKR's has Globex. What's the deal with BNED? Is there any DD in the Discord about it? It was me and Dork's secret stack. And then we ran our mouths, and now I have to hear about it every fucking day. Shocking. Yeah, I know. Yeah, but it was more fun when it was just me and Doric. No more inside jokes. As soon as the pores get a hold of it, the fun stops. They ruin everything. I knew, but it's only because it was ridiculously easy to figure out. Yeah. Yeah, it was. Are we gonna hang out for their earnings tonight? Ooh, we should listen to their earnings call. Wait, no. Hold on. They did move the fucking earnings. God damn it. Yeah, there's no earnings tonight. I need to stop listening to you fucking people and just look at the investor relations page. PBR has earnings tonight. The guys are going to be all the C-suite are changing their names to Ned, so they can in fact be Ned. Ha! The brand recognition will cause it to skyrocket, obviously. Please don't say hang on. It triggers ads. Then WeBull and Bazinga are wrong. Yeah. Yeah. You see Schwab filed a 13G, disclosing a 10% stake in Top. Well, now we know who needed the liquidity. The British Chancellor of the Exchequer, Jeremy Hunt, is Cockney rhyming slang for... Oh... This is the slowest rug pull in history. It's not even like a rug pull. It's just slow. I would like us to close at 51:45. It immediately goes down. Not enough. Reverse psychology always works. It seems we both should have held on to our Solana a little longer. Ah, whatever. Money's money, right? It's okay. I rolled that shit into Doge. I knew the morons would be showing up fast enough. That's disgusting. Hey, fuck you. All right. I tried to roll it into some F futures. We all know how that went. So we lost 60. I wasn't ignoring you, Odorous Dan. Hold on. Let me clear my schedule. What's going on, man? All day? That's ridiculous. Between ignoring me and the New Jersey hate, I saw your comments, but none of them were really directed at anything. You were just saying stuff in line with what was being said on the stream. Like you said some things about New Jersey, and then you had that hot quip about New Jersey RQ, which, you know. You do love me. I knew it. Hey, look at that. Oh. Whoa, whoa, whoa. Hey. Still need more downs. Although this could be the turning point. I can't believe I had to wait an extra hour for that shit. Half hour? Whatever. Listening to all you guys fucking whine about your out of the money puts was just the worst. But now the 40 support is gone. This is awkward. Uh-oh. We better hold 50. We're gonna reverse the whole thing in one candle. No. The 60 and 55 calls dumped pretty hard. Are you gonna bounce off gamma neutral? Dude, gamma neutral's at like 50, 80. I fucking hope so. Hear me out. 51.25. I mean, okay, so if we lose 50, it's possible. That shit looks pretty bearish. Yeah. A little support here, but I think we might actually get a little bit more downside off of this. That was a nice dump. Yeah, futures broke through resistance. Retesting that 51.50 level. So I guess futures below 51.50 now would be the next like target for the downside move. It's like a $6 drop though. $7 drop. Hmm. A pretty big dump in Delta there. Yeah, this isn't recovering super quickly. There's not a lot of buyers coming in. Few came in, but it's not strong. Collars at 50.15. The big one. The little one's at like 58 something. It's stupid far. They're 54, some shit like that. It's really, it's way the fuck out of the money. Like 4% or something. This is where that support is. So if we lose this, it's a very big deal. Remember, I told you guys wanted it at 50, 80, 50, 52. I know I still have the XSP puts. Yeah, non-farm's a big deal tomorrow. QQQ selling off a little harder than SPX, which is a good sign. A little spike in vol. Probably gonna burn a day trade on some of these credit spreads. We'll see. Still holding my XSP puts against my better judgment. I mean, at this point, they're like worthless unless they print, right? Rip to all the regards who bought calls on the bear flag. Yeah, that was kind of brutal. You're a beautiful pickle. Thanks, Huckleberry. What does it implicate when GME option open up so many out of the money calls? 2025, 2026. I don't know. It's usually like, I mean, leaps are bullish. So if they're long. I don't see vol shorts trying to crush volatility on Ivy that far out, so I would say that it's probably bullish positioning. I mean, earnings should be good, right? Like they should beat. I think I'm like I have the 15 XSP put. I still needed to drop another few bucks. Yeah, there's still room for more downside. Yeah, the little bit of delta that came on's starting to fall off again. Seems like they're more focused on keeping vol down than really trying to protect this 5150 level. ES is still holding 5150. Well, 55. $5 higher, but it's not bouncing back to support at 60 though, which I guess is a good sign. Longer term momentum is super negative. So I feel like in a couple minutes we make it more downside. I mean, they're not doing a lot to defend 50, so we could. But even if we break it, we could snap back to it. Like the majority of positioning near the money right now is at 5150. So unless we fail it really hard, right, like drop to like 40 or something or under, then I would say that we can hold 5150. So like even if we were to drop to like 45, we'd probably bounce back. We don't leave any gaps, right? No. Double bottom. I'm trying to buy their way out of the hole. Alright, we're back above future support. Tentatively. Where does the MM want us to end? Kind of right where we're at. Couple bucks lower. I think the MM's pretty happy here at like 52. But if we fall to the downside of that, like the MM's gonna be a bit negative, right? Yeah, they're shorting VIX a little bit, but I don't think that's gonna be a very successful endeavor. At least not right now. I'm still full of adrenaline from my 51.25 put not only getting bailed out, but going 100%. Nice, man. What's BNED doing? BNED just ripping even though there's no earnings. Ooh, nice. It's almost at $1. How's shorting on Fubo? Pretty strong, actually. Liquidity's getting sucked up really fast on that. Is BNED moving because RC moved earnings? No, RC has nothing to do with BNED's earnings. I love how TUPS dropped 30 cents and my out-of-the-money options have gone up in value. 3 cents, sorry. I use sell covered calls on Fubo occasionally, usually when it runs. I don't do deep in the money. I mean, just like 50 cents in the money. Sometimes $1 in the money at most. I don't know. Are you, C-Mill? I hope so. Hmm. Call positioning is starting to break down a little bit. They might be giving up. Maybe. Still learning about CCs. Fair enough. Does Netflix drop $100 by next Friday? I don't know, maybe. I doubt it. Does it need to drop $100? You mean $58? Do you ever think that Chad was permalong the video to pay for his wedding? How many weddings do you think he has had now? I don't know, but he probably sold everything on the earnings beat, right? Giving up with 40 million left seems unlikely. 40 minutes left. I don't know. They're not having a lot of success with the vol short here. QQQ is a bit weaker too than SPX. That's 3 BNED shares. It's true. That's a distinct possibility, Thunder. It was just about shorting vol. Could it be step down $5, short vol, step down, short vol? Yeah. Yeah, just keep vol in range and continue to allow the price to drop. I mean, that's kind of what it looks like, right? Because they're shorting vol a lot, but they're not buying a lot of calls. Or they're just saving all their call buying for the end of the day. They're gonna pump it to like 51.65. Which don't assume that outcome's not possible. 1 second. Why are they so scared of vol? Because if vol closes higher, their margin requirements move up. Can you look at the level 2 on BNAD? There's about 5,000 shares between us and $1 right now. There's conditional orders that aren't on the tape, but we just hit $1. Ooh, if we lose 50-50, we lose the supportive charm on the 0 DTEs too. Interesting. Ooh, that would be kind of bearish. Can you say my username? It makes me feel special. Thor Muy Bueno. Thank you so much. I hope that did it for you, man. Jimmy got a new logo to the moon. Oh, Jesus. Make it fail 50, please. I'd like that. I was promised BNet ass the moment I touched $1. No. My WeBull says 0.99. It's because it's inferior. Docu has earnings tonight too. I think so. Yeah. What the fuck is Vol doing? Futures falling a bit below support again. Ooh, Vol's moving up. A little bit. Very sneaky. Yeah, the DMM's just gonna absorb your orders, man, and you're gonna get fucked. 30 MTE time? The MM must have his donation. Too soon. Oh my god. We just need NVIDIA to dump, right? That's the only thing propping this up. Or Apple. Apple's already dumping. Tesla looks like shit. Apple, Amazon, shitty. AMD turning around. Microsoft. Oh, gross. Hmm. Back into this trend again. Stop playing games and give us the news. Is there a better feeling than fighting not to brown your pants on your drive home and then making it a photo finish? It might be better than making white, if you ask me. Have you ever noticed that, like, the closer you get to home, the more you have to poop? It's like your body's proximity sensor for your own personal toilet. I don't know, some Pavlovian fucking training or something. I work from home. I'm pooping all the time. Are my two 4145Ps a bad idea? They might be. You're gonna know pretty soon. See what this is what I want us to do. This is what we're probably gonna do. Thanks, I hate it. I do too. If it's any consolation, QQQ looks way worse. And NVIDIA has a red candle. It's not. I tried. $51, $50, $55. Ooh, someone put up a put wall at 60? What the fuck? That's weird. Are they selling the 60 put? Hmm. If Nvidia could just drop back to 900 real quick, that'd be perfect. If Nvidia has a red candle, then 25% of the market's selling off. Ugh. I think Broadcom earnings are today. Right? Maybe I'm wrong. Yeah, you're right. Hmm. $20 left. Son of a bitch. My Fetterman cookie. If big green candle is a whole candle, what's a big red candle? Shark Week? Ah, whatever you want, man. I don't know. Twizzlers? I thought we did Twizzlers. Ooh, Vol's getting juicy. There's a lot of futures volume. Huh. There's upside resistance here. 5186 in the technical. It's like a little put wall at 60. It's not very big, but it is one. This is sus. It's shitty. I don't think it's sus. Video running to resistance at 25 again. Yep. There's like another trend here that matters, but it's further time frame. Hold on. It's right here. Mm. 15 minutes left. Charm's still pretty strong. Yeah, Charm's pretty supportive here. The close has moved up to 55. I love it when bear flags break up. Yeah, it's the best. $15 to expiry pets? Maybe. We might see a bump in put positioning here, but I think the charm's really supportive is the biggest problem. And also we're above the 50 wall for tomorrow too. We're almost above the 60 wall for tomorrow. We'd have to slip pretty quickly. Like we need a big capitulation on the call side to fall. Right now we're not quite getting that. The 5155p is looking like degen material. It's expensive still. Actually, that's not that bad. I thought it was closer to $2. We still could see neutral positioning pile in around 50 for NFP in the morning. That might drag price down, like if puts come in for tomorrow's expiration. I paid €50 for £2 40-day dry aged steak coming from Romagnola IGP breed. 100% not worth the money. Tender, but no flavor. Noted. I won't buy those. No, Jolts was on Wednesday. Yesterday. Yeah, they've priced out a lot of the risk premium already. Beyond getting rejected from 8, have they gotten those calls out from underwater? I don't think so. Ooh, that's actually a pretty good rejection. Support at 55, yes or no? Ooh. Okay, lots of put buying. Interesting. That's super fucking bearish. Is that gonna... Someone's buying a shitload of puts. Getting real sensitive. God, I love the end of day dork. AVG is 7% of Soxel. I know. Ooh. Yes, rejected, but it's not selling off very hard. Hmm. We're expecting more downs on Beyond tomorrow. Jesus fucking Christ, man. The back and forth between puts and calls is fucking nuts. At this point, yeah, the MM's, well, we're a little bit above where the MM wants. The MM wants to be like just under 55, so we're a little bit above that. Motherfucker. Look at the fucking QQQ volume. Pair flag? No. All flags are for bulls. Yeah. Big spike in VIX there. What the fuck? Okay. It's a little bit more bearish. Down, down, down. 3 minutes. ES is starting to sell off a bit. I think we're going to realize the extent of the imbalance here, though. Yeah. Mm. 30 seconds. Ding ding. Oh well. Day is done. Managed to hold 51, 57, 75 on futures into close, unfortunately. Pretty strong call wall there at 51.50, so I'm not surprised we couldn't break through it, but it still kind of sucks. This will probably sell off the rest of that positioning after close. Ranges are going to move up tomorrow. If NFP is not too hot, or if it's soft, I expect we'll probably see more upside tomorrow up into like the 51.75, 51.80 range. Commodities up again today. Dollar down deeply, but yields actually pretty flat over the entire period. Core 1 and 3 month down quite a bit. We're getting back a lot of vol shorting. Forward return on volatility yields still very close to positive, and we actually went just above positive in the pre-market. Well, I guess last night. Move not updated yet. Skew from yesterday went down. That's probably not accurate. 39.16%. So it's roughly the same as it was at the end of the day yesterday. We got RSP up 78 BPS today. QQQ 152. RTY was up 76. Dow up 26. VIX 1 down 116 BPS. And then the only yield that ended positive on the day was the 30. But the 10, 20, and 20 were up for a little bit of that period. I think we have Broadcom earnings tonight. We have PBR earnings tonight. Earnings for BNED were canceled. They have not announced, I don't think yet, when they're going to be doing those. I'm pretty sure, yeah. So they moved their third quarter earnings. They haven't announced when they're going to be. Not yet. Beyond tugging $8. Yeah, it seemed to bounce back a little bit at the end of the day there. Not much, but a little. There was a pretty big move in liquidity right after hours. I don't. That might just be like an artifact though. Where does that put us on the path for tomorrow? I would say we're probably gonna see VN rise. I'll probably see GM rise a little bit too. And I think right on track for my end of week target around like 51.90 or so. Maybe for the high of the day, but we'll see. Obviously, NFP is going to play a big role in what happens tomorrow because if it's hot, that's not going to be bullish. It's usually like with small stocks like that, it's usually like an accounting thing if they delay their earnings. I don't think it's like a going out of business thing. Otherwise, I think the response in the stock itself would be probably more dramatic. I think it's just like they just don't have the like audits or everything done yet. 51.90. How did we get here? Well, I mean, it's kind of where I expected us to end the week. Peanut has too much money to keep track of. PBR earnings. I don't know what time they announced them, but I don't think they've announced anything yet. Probably in a little bit. We could check AVGO. They look like they're up about $7 in aftermarket. But I'll check those. Anyway, thank you guys so much. Have a good one.